and gentlemen, our chief guest for the opening ceremony, Honorable Finance Minister Dr. Prakash Charan Mahat, has joined us. We'd like to welcome him with a big round of applause. Thank you very much to our Honorable Finance Minister for your gracious presence here at the opening ceremony of Asian Insurance Meet 2023. Ladies and gentlemen, I'd like to request all of you to kindly rise in honor of our national anthem. Good morning, ladies and gentlemen, insurance supervisors from the Asian region, along with insurers, reinsurers, brokerage firms, and other stakeholders from around the world. We'd like to welcome you all to the opening ceremony of Asian Insurance Meet 2023. Our chief guest, Honorable Finance Minister Dr. Prakash Charan Mahat, Chairman of Nepal Insurance Authority, Mr. Surya Prasad Silwal, board members of Nepal Insurance Authority, directors and deputy directors, representatives from our co-organizers IAIS, ADB, and A2II, representatives from various institutions, insurance industry leaders and experts, friends from the media, ladies and gentlemen, welcome. As the world continues to face new and complex risks, it is essential that the insurance industry remains resilient and be able to adapt to the changing circumstances. We have centered the theme of the Asian Insurance Meet 2023 around this very fact as well. The conference is convened by Nepal Insurance Authority in cooperation with International Association of Insurance Supervisors, Asian Development Bank, and Access to Insurance Initiative. We are honored and delighted that all of you could participate in the Asian Insurance Meet 2023, and we look forward to discussing the challenges and opportunities that lie ahead for the insurance industry. Ladies and gentlemen, as we begin our event, I would now like to invite on stage the Chairman of Nepal Insurance Authority, Mr. Surya Prasad Silwal, for his welcome address.
Honorable Finance Minister, Excellencies, distinguished guests, esteemed participants, and friends from media, ladies and gentlemen. It gives me great pleasure to extend to you all a very warm welcome on the auspicious occasion of opening ceremony of Asian Insurance Meet 2023. I am honored to welcome our esteemed chief guest, Honorable Finance Minister Dr. Prakash Charan Mahat, along with the distinguished presence of Secretaries of Government of Nepal, the Chairman of Institute of Chartered Accountants, and high-level officials of various ministries and institutions. I feel privileged to welcome you all gathered here today. The presence of Finance Minister as our chief guest is of immense importance, and we are truly privileged to have such esteemed leadership amongst us. The Finance Minister's presence today signifies the unwavering support of government toward promoting a robust insurance sector that is well equipped to tackle emerging risks and challenges faced in today's changing global landscape. The finance minister's guidance and support have been instrumental in formulating policies and regulations that enhance the resilience of insurance industry. I must acknowledge the immense support from our line ministry, Ministry of Finance, in imparting our role as the sole regulator of insurance sector in Nepal. Insurance has always been prioritized in the fiscal policy of Nepal government, with policies like providing subsidy to promote agriculture insurance, encouragement of micro and inclusive insurance to increase the insurance penetration, introduction of innovative policies and commitment to provide personal accident insurance to sectors most exposed to such risks. The enactment of Insurance Act 2022 is a milestone achievement for the entire insurance industry. Looking ahead, we have ambitious plan for the future of insurance sector. It is indeed a challenging task to fully implement the Insurance Act. The insurance regulation is awaiting approval and amendment of existing laws are in the process. Our focus is to develop a proactive regulatory framework that promotes innovation, consumer protection, and risk management strategies that can effectively promote fair practices in the market and increase the penetration and reach of insurance. In coming days as well, we hope to receive continuous support from our line ministry to address the evolving challenges faced by the insurance industry and policyholders alike. Moreover, we firmly believe in the power of a harmonized and integrated approach across all segments of financial sector to ensure the stability and resilience of the entire ecosystem. The insurance sector, as an integral part of financial market, plays a crucial role in supporting economic growth, financial stability, and risk management within any country. The support from Finance Ministry and a close collaboration and coordination between the regulatory bodies of Nepal's financial system and stakeholders will ensure the stability, integrity, and resilience of entire system. Harmonizing regulations, streamlining procedures, and promoting information sharing across the entire financial system can minimize duplication of reports and reduce compliance burdens on market participants. This, in turn, fosters a business-friendly environment that encourages innovation, attracts investment, and drives sustainable growth. Ladies and gentlemen, the theme of this conference, Building Resilience of Insurance Toward Emerging Risks, is of utmost importance in today's rapidly changing global landscape. The conference offers us a unique opportunity to explore and discuss the challenges and opportunities that lie ahead for the insurance sector, particularly in the face of emerging risks. We are privileged to have distinguished keynote speakers, presenters, and panelists who will shed light on critical issues challenging the global insurance scenario. The topics covered throughout this conference will definitely prove to be invaluable source of knowledge and learning opportunity to entire insurance industry. Ladies and gentlemen, I would like to emphasize that climate change has emerged as an urgent global concern, and the insurance industry has a crucial role to play in addressing its impact. Insurance supervisors need to collaborate with the industry stakeholders to develop frameworks and strategies that effectively manage climate risk and support sustainable development. The insurance industry, through innovative products and risk management practices, can seize the opportunity presented by climate change. Furthermore, the South Asian region, and particularly Nepal, is one of the most vulnerable regions that has been impacted by climate change and natural disasters. As a region prone to seismic activities, it is essential to learn from each other's experience and develop effective earthquake insurance mechanism. This conference will provide an excellent opportunity in this regard too. Distinguished, the nation with agriculture as a major economic activity will definitely benefit from the coverage from agriculture insurance. The development and implementation of effective agriculture insurance program are vital to support farmers and ensure the stability of agriculture sector. During this conference, we'll explore the latest developments and practices in this field, aiming to enhance the accessibility and affordability of agriculture insurance for the farmers. Additionally, the conference will also shed light on practices, opportunities, and challenges in life insurance market. With changing demographics and evolving customer needs, life insurers must adapt their products and distribution strategies to remain relevant and meet the demand of the market. Moreover, the importance of risk-based supervision cannot be overstated. A robust regulatory framework and effective supervision is critical maintaining financial stability and protecting policyholders' interests. Ladies and gentlemen, by working together, we can leverage our collective expertise and resources to develop robust risk management practices and implement effective supervisory measures. I encourage all participants to actively engage in discussions, exchange ideas, and propose innovative solutions throughout this conference. Last but not the least, I would like to express my deepest gratitude to the organizing committee, our co-organizers, IIS, ADB, and A2II, our esteemed guests, and all the participants for making this event a grand success. Welcome you all again. Thank you.
Thank you very much, Mr. Surya Prasad Silwal, Chairman, Nepal Insurance Authority. Ladies and gentlemen, we are now moving towards the official inauguration of the Asian Insurance Meet 2023. And for all our international invitees, I'd like to mention that in our culture and tradition, all events are commenced with the ritual of the lighting of lamp. And the symbolism here is that light is knowledge and darkness is ignorance. And knowledge removes ignorance just like light removes darkness. And we also believe that knowledge is a lasting inner wealth by which all outer achievements can be accomplished. And now, to do this beautiful ritual, may I please request our chief guest, Honorable Finance Minister, and I'd also like to request our Chairman, sir, to kindly join. This is the lighting of the panas, the official inauguration of Asian Insurance Meet 2023. Thank you very much, Honorable Minister, for doing the honors. And ladies and gentlemen, with this, we have officially inaugurated the Asian Insurance Meet 2023, building resilience of insurance towards emerging risks. Ladies and gentlemen, we hope that was a lovely surprise for all our participants, as we also have many international delegates who are visiting Nepal for the very first time, and all of you might or might not have the time to travel for pleasure after the meet is over. So we brought a tiny piece of our culture to you. That was the Lakhe dance that happens mostly during the various festivals that happens inside Kathmandu Valley. Ladies and gentlemen, we are delighted to have the presence of Honorable Finance Minister Dr. Prakash Charan Mahat. And now, may we please invite him on stage for his address in this August gathering.
Distinguished participants, ladies and gentlemen, I extend my warm greetings to all of you gathered here today at this important conference, Asian Insurance Meet 2023, with the theme Building Resilience of Insurance Towards Emerging Risks. I feel honored to address you as the Finance Minister of Nepal, and I am delighted to witness such a important experts and professionals dedicated to enhance insurance industry. Distinguished guests, a well-developed financial system is a crucial and contributes to economic growth through an efficient allocation of resources and saving mobilization. The insurance sector plays a pivotal role in securing sustainable development goals. Insurance will be critical to the achievement of six of 17 Sustainable Development Goals, SDGs, such as end poverty in all its forms, end hunger, ensure healthy lives, achieve gender equality, promote sustainable, inclusive, and sustainable economic growth. It is also important to the completion of 5 other SDGs. It acts as a catalyst for risk mitigation, financial stability, and as an enabler of solutions that drive social and environmental sustainability. As the Asian continent continue to witness economic transformation, it is essential that our insurance industry adapts to the evolving landscape and effectively address emerging risks. Today, we stand at a critical juncture where we are witnessing an unprecedented rise in risk, both traditional and new. We have experienced the devastating impacts of natural disasters, economic volatility, cyber threats, devastating impact of natural disasters, economic volatility, cyber threats, and pandemics. Pressing issue of climate change, rapid changes in demographics, evolving customer preferences, and advancement in frontier technologies poses significant challenges. These emerging risks not only pose challenges to the stability of insurance institutions, but also impact the financial security of individuals, society, and businesses across the region. In the pursuit of building resilience in our insurance sector, collaboration and innovation are paramount. Regulators, insurers, reinsurers, and brokers must work hand in hand to develop robust risk management frameworks, enhance supervisory mechanisms, and promote a culture of innovation. It is imperative to strike a balance between safeguarding the interest of policy holders and encouraging insurers to embrace technological advancement and explore new product offerings. Additionally, fostering financial literacy and increasing insurance penetration among the population are crucial steps towards building a resilient life insurance market. In the face of emerging risks, the role of regulators becomes pivotal. Regulators must proactively adapt their framework to address the changing risk landscape while ensuring consumer protection, promoting market stability, and encouraging sustainable growth. Effective regulation requires a harmonized approach, sharing of best practices, and mutual learning among regulatory bodies across Asia and throughout the world. Insurers and reinsurers, being the backbone of insurance industry, need to strengthen their risk management practices and underwriting capabilities. That they need to be innovative in response to the converging challenges of natural disasters, social exclusion, climate change, and long-term finance. By embracing advanced analytics, artificial intelligence, and machine learning, insurers can enhance their ability to assess risk accurately and improve their claims management processes. Insurers should play a proactive role in assessing and managing climate-related risk, integrating climate risk modeling into their underwriting processes, and encouraging sustainable practices among their policyholders. Reinsurers, on the other hand, should collaborate closely with insurers to develop innovative risk transfer solutions that addresses emerging risk effectively. Furthermore, brokers and agencies play a vital role in bridging the gap between insurers and customers. They act as trusted intermediaries and advisors to policyholders. In this area of emerging risks, brokers should focus on enhancing their knowledge and expertise to educate customers about the risks they face and the insurance products available to mitigate them. Embracing digital platforms and leveraging technology will enable brokers to reach a wider audience and provide personalized solutions. Ladies and gentlemen, building resilience in our insurance sector requires a collective effort from all stakeholders. Collaboration, innovation, and a proactive regulatory environment are the key drivers of success. By working together, we can create an insurance industry that not only protects the interests of our citizens, but also contribute to the sustainable development of our nation. Your actions should not just contribute to risk mitigation, economic prosperity, social inclusion, and environmental regulation, but also bring multiple co-benefits of enhanced consumer trust, insurance growth, and adaptation to an evolving market environment. Distinguished guests, on behalf of Government of Nepal, I thank all of you for participating in this event and would like to call upon the international community to extend support for building the institutional capacity of the regulators and the players of insurance market in order to make Nepali insurance sector more efficient and credible. I encourage you all to utilize this conference as an opportunity to enhance, exchange ideas, share experiences, and explore collaborative avenues. Let us collectively embark on a journey to build a resilient insurance sector that effectively mitigates emerging risk and safeguards the financial well-being of our society. Finally, I would also like to thank the organizers and extend my warm welcome to the participants from different parts of Asia and overseas, and wish you all a pleasant and comfortable stay in Nepal. Thank you for your attention, and I wish you a productive and engaging conference. Thank you very much.
Thank you very much. Thank you to our chief guest. Thank you very much, Honorable Finance Minister, for shedding the spotlight on the crucial work that the industry and the people involved with this industry, they do. We are grateful to have you in the opening ceremony of the Asian Insurance Meet, and your presence has definitely elevated all our spirits as well. We believe that Honorable Finance Minister has other commitments that he has to attend to after this, but we are extremely grateful that he had his presence here in the opening ceremony. And now, as we conclude this opening ceremony, may I please invite our chief guest on stage for a group photograph along with our chairman of Nepal Insurance Authority. We'd also like to invite the board members and directors of Nepal Insurance Authority to kindly join us on stage as well. AIS, ADB, and A2II. May I please request Mr. Arup Chatterjee, Ms. Manuela, Mr. Ronaldo, and Ms. Lam to kindly join us on stage as well. Thank you very much. Thank you, our distinguished guest, Honorable Chief Guest, and other various dignitaries on the stage. Once again, we would like to express our immense gratitude towards Honorable Finance Minister Dr. Prakash Sharan Mahat for being present in the opening ceremony, and we really thank him for his time and presence. Thank you very much, sir. Ladies and gentlemen, this is day 2 at the Asian Insurance Meet 2023. We are talking about the new and complex risks that are coming up ever so often in the world, and how it is crucial and essential for the industry, for the insurance industry to remain resilient and to adapt to all these different changes. We will be talking about this specific theme in 4 different sessions as well throughout the day. We're talking about climate change, earthquake insurance, agricultural insurance in the 4 sessions that will follow very soon. But for now, may I please invite Mr. Arup Chatterjee, Principal Financial Sector Specialist, Asian Development Bank, for his keynote address.
Chairman of Nepal Insurance Authority, Mr. Surya Prasad Silwal, senior representatives from the government of Nepal, captains of the Nepalese insurance industry, excellencies, distinguished guests, ladies and gentlemen. On behalf of the Asian Development Bank, warm greetings to all and namaste. I'm deeply grateful to the Nepal Insurance Authority and the co-organizers, the IAIS and the A2II, for the privilege to be here as a keynote speaker on this special occasion. Destiny has connected us by an invisible thread here at the Asia Insurance Meet in Kathmandu, in Nepal, Lord Buddha's country of birth, to discuss how the insurance industry can help fight climate change. Nothing is independent, as we are told by the teachings of Buddhism, rooted in Pratitya Samputta Pada, or dependent origination. An ancient Buddhist tale explains this concept. It tells us of a mythical tree whose vast canopy provided shade and abundant fruit that could be harvested freely. But when a greedy person stuffed himself and broke off one of the branches, the tree stopped bearing fruit. The ancient myth is playing out in the modern world, most alarmingly in the worsening impact of climate change. The Asia Insurance Meet is therefore very timely. Policymakers, financial regulators, insurers and reinsurers, and other stakeholders in and outside Nepal can act together to incentivize climate risk mitigation and adaptation. Let me briefly review climate change-related risks, particularly how they impact the insurance sector and reflect on opportunities. I will then share my thoughts on how Asian insurance industry can position itself for building resilience of insurance towards emerging risks, to use the Nepal Insurance Authority's commendable theme today. I'll elaborate on 5 key ideas. Climate risks manifest as physical and transition risks. Insurance offers a unique tool to assess and price such risks, provide capital and efficient risk sharing and transfer mechanisms, and enable transition to net zero. Effective regulation can enable risk management to build resilience and reduce the insurance protection gap. Policies must shift market incentives and encourage investment in climate-resilient infrastructure projects in line with low-carbon growth and strategies. Climate risks also threaten the insurance industry, and insurers thus need current underwriting and exposure limits. Ladies and gentlemen, temperatures in Asia and the Pacific are rising twice as fast as the global average, risking more frequent and severe heat waves. In 2022 alone, major natural hazards, including floods in Afghanistan, Bangladesh, India, Pakistan, and Thailand, droughts in China, Kiribati and Tuvalu, and typhoons in Megi and Nalgae in the Philippines. Worse still, out of the total economic losses of $313 billion from disasters in 2022, 58% were uninsured. This is an enormous protection gap, the difference between optimal and actual insurance coverage. The Asian protection gap averages 92%, burdening people, public budgets, insurers, and governments alike. Our region also produces about half of the global greenhouse gas emissions and is home to 5 of the world's largest national emitters. Current GDP of Asia may shrink by 26.5% by 2048 if no action on climate change is taken, says the Climate Economics Index developed by the Swiss Re Institute. This index is modeled on multiple climate scenarios and takes into account expected economic outcomes, vulnerability to extreme weather risk, and also factors in existing adaptiveness readiness. Ladies and gentlemen, climate risks manifest in 2 ways. Under the first, physical risks can damage properties and disrupt supply chains to cause enormous losses to businesses and economies, exacerbated by a lack of climate risk mitigation infrastructure and other capacities. Under the second, the overall shift in policy, technology, and market sentiment raises costs, reduces incomes, and stranded assets amid technological breakthroughs and transition requirements to a low-carbon economy. Both physical and transition risks impair asset values and credit quality of loans and investments from banks, financial institutions, insurers, and capital markets. Yet, governments and businesses have been slow to integrate climate risks and its threat to financial systems into their decision-making strategies. Indeed, COVID-19 has also demonstrated that income smoothing social safety nets, public insurance schemes, and counter-cyclical financing mechanisms are either absent or underdeveloped in many countries. This can create sizable implicit contingent liabilities for governments if shocks become too frequent and intense. Ladies and gentlemen, Fortunately, the insurance industry is attracting considerable attention as a promising tool in climate risk management and in resiliency to climate and environmental shocks. The industry is uniquely qualified to assess, communicate, and price risk through differential premiums and by setting deductibles, providing financial stability in the process. These critical economic signals about the changing risk environment can incentivize individual policyholders to reduce risk and in turn limit the impacts of extreme weather. Acting on price signaling, for example, homeowners might fortify their roofs to typhoons and thus pay a lower premium or face a lower deductible. By contrast, by promoting public-private partnerships, insurance can help absorb shocks and support real economy actors by protecting debt service exposure against climate change-induced events and reducing default rates, helping maintain creditworthiness. Insurance or insurance-linked mechanisms, including inclusive insurance, by providing financial compensation or shock-responsive social protection, can hasten recovery and boost resilience. However, insurance can become less attractive for high-risk households or farmers when premiums reflect the underlying risk. Balancing premium affordability and risk reduction incentives is thus important and suggests more open and transparent engagement with various stakeholders in risk management. Any successful response must involve a mix of compulsory and voluntary measures, backed by a robust framework for assessment, implementation, and monitoring that leverages the latest technology, big data, data analytics, automation, artificial intelligence, and machine learning. To make an insurance scheme perform well, one must see the long-term costs and benefits in light of a broad range of risk management tools, i.e. prevention, protection, and early warning. We also need an enabling environment for disaster risk financing and use a risk-layered approach for crafting national disaster risk financing plans for deployment of a wide array of financing instruments. The Asian Development Bank has developed a methodology and toolkit for such assessments and has published diagnostic reports, including that of Nepal. It has carried out pilots on parametric crop insurance and is exploring pilots for insurance at the sub-sovereign level for ensuring critical physical infrastructure of municipalities and cities, SMEs, and homeowners. Ladies and gentlemen, insurers need to shift business models away from transactional risk transfers and indemnity payments toward mitigating physical climate risks. These include things such as rebates for using resilient construction materials, working with governments to improve land use planning and building standards and policies, and supporting in a just transition away from coal to clean energy. In physical risk, the insurance industry with the multilateral development banks can help identify and foster measures such as recommending specific public investments in adaptation that reduces the risk and increases insurability. We also need a much greater volume, velocity, and granularity of data sets using modeling techniques and approaches to allow consumers and insurers to understand and price risks clearly. Risk assessments can help drive climate-sensitive public policies, investments, and risk management solutions. The insurance industry could also consider offering innovative solutions like parametric insurance and pooling mechanisms, and also alternative risk transfer solutions using capital markets for specific risks by collaborating with governments to provide affordable coverage. This could include pooling a large set of projects in many jurisdictions backed by guarantee schemes or de-risking solutions. In the agriculture sector, insurance against multiple risks can contribute to the overall cost effectiveness of insurance schemes against climate-related risks. These could focus on loss yield insurance, linking premium subsidies to direct investments in multi-risk policies, and introducing pool-like structures or public reinsurance for specific time-bound hazards like droughts. The insurance industry is likewise moving to protect endangered blue natural resources. On coasts, mangroves, and coral reefs can cost-effectively reduce flooding. The industry is starting to use innovative risk transfer schemes to conserve and restore natural ecosystems, and this includes the Hindu Kush Himalayas, where ADB has recently got engaged. Insurance offers coverage opportunities for the full cycle of renewable energy projects. According to the International Energy Association's projections, solar, wind, hydro, biomass, and the like will provide 49% of the global electricity generation by 2050. Yet the risks keep growing. Providing underperformance guarantee insurance coverage can make renewable energy projects more bankable. The insurance sector in emerging markets nonetheless faces significant headwinds in accessing capital, data, tools, and capabilities. Taxonomy, rules, regulations, standards, and best practices remain nascent, weakly defined, and unharmonized. When considering a climate risk management tool, some features consistently make it perform better than current practice. Combining multiple extreme weather risks in a single insurance product, embedding extreme weather insurance into a more standard and enforced product, addressing risk transfer, disaster risk reduction financing, and data sharing for better governance, provision of a national pool or public reinsurance, or backstopping support for catastrophic losses. Of course, ladies and gentlemen, unlocking trillions in new climate investment requires reforms. Policies are needed that shift market incentives and invest in infrastructure projects resilient to climate change impacts and in line with low-carbon growth strategies. And insurance markets are critical to efficiently allocate resources while pricing climate risks. Contractual saving institutions are incorporating their exposure to climate risk in their investment, lending, and underwriting decisions and integrating them into broader risk management processes. Environmental, social, and governance issues are thus gaining in traction, with institutional investors exerting influence and channeling investments into projects that deliver measurable non-financial benefits while improving long-term financial returns. By actively pursuing investments in the region in solar, wind, energy storage, green buildings, energy efficiency, waste management, climate-smart agriculture, and natural capital, insurers can help these industries and financiers reduce carbon footprints. We must nonetheless bear in mind that climate-related risks are an imminent threat to short and long-term stability and sustainability of insurance operations. These risks impact insurability of policyholders' property and assets and insurers' operations and investments. Increased natural catastrophe exposure can lead to greater risk capital requirements or even higher premiums for non-life insurers. These could be in the form of loadings for anti-selection and also additional margins for the absorption of catastrophe-related losses that are more frequent and more severe than previously envisaged. Reduced reinsurance capacity could lead to lower mitigation benefits in capital planning. There may also be risk of financial exclusion to certain natural catastrophe-prone vulnerable policyholders as premiums become unaffordable or the cover is not within the insurer's risk appetite. For life insurers, climate change may change demographics or mortality and morbidity, and in turn increase investment uncertainty. It may leave insurers unable to meet guaranteed returns and seek greater accumulation of risk, resulting in events of mass loss of life inherent to increased catastrophe activity. Forward-looking insurance regulators are thus advising insurers to reassess the acceptability of current underwriting and exposure limits and the questionable tenability of current reinsurance and retrocession arrangements. In conclusion, ladies and gentlemen, the battle against climate change will be won or lost in Asia and the Pacific, that is our region. In Ernest Hemingway's novel, The Sun Also Rises, a man is asked how he went bankrupt. Two ways he answers, gradually, then suddenly. The insurance industry risks the same. We cannot solve our problems with the same thinking we used when we created them. Climate action can improve lives, create jobs, build green cities, and protect ecosystems. Fresh thinking in the insurance industry can prepare the foundation to help our society achieve these benefits. Thank you for a very patient hearing.
Thank you very much, Mr. Arup Chatterjee, Principal Financial Sector Specialist, Asian Development Bank, for this in-depth keynote that covered various aspects of the challenges posed by climate change. And thank you for also highlighting how these challenges could be combated. We would now like to present you with a token of appreciation, and for which I'd like to invite Mr. Surya Prasad Silwal on stage to kindly present Mr. Arup Chatterjee with this token of appreciation. So we're presenting you a miniature version of the traditional oil lamp panas. This is made out of brass, and in the present date, it can also be used as a piece of handicraft. So we hope that you take a piece of Nepal with you. Thank you very much. Ladies and gentlemen, we are now diving into the first session of the second day at the Asian Insurance Meet 2023. We are now going to be discussing about the IAIS focus on climate change and role of insurance supervisors in climate risk insurance. We have two presenters in this particular session. And firstly, I'd like to invite on stage Ms. Manuela Zwemuller, Head of Implementation, International Association of Insurance Supervisors, on stage.
Perfect. So first of all, really, thank you so much for allowing me to be here again after a very, very fruitful and interchangeable and vivid discussion of yesterday. So I'm really supporting the bright picture that Arup was painting. So there is a future for renewable energies, and with this we can really also stop the climate change risk. And I also wanted to say that I really love the quote on Hemingway. And with this, I would like to say my huge thank you to the Nepal Insurance Authority for the invitation, for being here. It's a great honor to us. And it is really also, I'm very, very, very touched by the warm hospitality of Nepal, its people, and the Nepal Insurance Authority. Thank you so much. So, esteemed chairman, esteemed members of the board, esteemed executive director, colleagues from the Nepal Insurance Authority, excellencies and distinguished guests, high-level participants from the insurance industry here in the region and Southeast Asia. It's a great pleasure to talk to you this morning. I will start with the first presentation on climate change, climate risks, and then our key implementation partner on capacity building, the A2I, will continue with what they can offer on the capacity building side, also on climate. And there is a lot in the bag, I can promise you. The focus on climate change, what are we doing? The IIS is the International Association of Insurance Supervisors, so we consist of more than 200 jurisdictions. More than the majority is from emerging markets and developing economies, and this is why capacity building is also part of our high-level goals. And climate is amongst other, such as cyber, that was also mentioned, or diversity, equity, and inclusion, one of our strategic themes on which we are working already since years. And you will see it, it's not only since yesterday. And I really want to emphasize that insurance and the insurance industry and insurance supervisors and regulators are thinking about climate risk since decades already. If I think about really the reinsurance industry, they have been a major provider to make catastrophe losses insurable. And that is really since decades. So there is a lot of knowledge and expertise in the insurance industry that we really need to make use of to tame the climate risk. This is my tool. So I would like to give you a very, very short background and overview of what the IIS has been doing since years. Then how we are tackling climate-related risks in our roadmap and addressing the protection gap. So we are hearing about the protection gap since the morning, and we also have some work to offer here. Climate-related risk, and that is on the next slide, is very clearly a source of financial risk. And what the IIS is trying is really, we are working to focus, to equip supervisors and regulators to heighten their focus on the accelerating transition and physical risk, and on ensuring that insurers take appropriate action in responding to these risks. And with this, I would like to quote from a paper, from a staff paper, that was published in April by EIOPA and the European Central Bank on climate risk, and in particular the impact and the economic relevance of the climate insurance protection gap, and that it constitutes a financial risk, because I think that is important for governance and also for finance ministers. So cat risks, and we all know it here in the room, so we are from the knowledgeable industry, they can typically have adverse impact on subsequent GDP growth and inflation. So in particular, when you are in an emerging market, in an EMDE jurisdiction, a cut loss, a huge cut loss, has an impact on GDP growth and inflation in this country. And this is impacting in the long term, but also in the medium term, economic production and also consumption. For example, because of the economic activities are slowed down and recovery paths are also slowed down. And we also have heard this from Arup. And that can affect regional and national GDP growth and consumer price inflation. So you can even have an effect on the consumer price inflation by big nat cat losses. And that is really very well fleshed out in this paper, in the first chapters. So cat risk and cat risk insurance, in particular, reinsurance and insurance, can play an important role in mitigating the negative macroeconomic effects of disasters. I think this is why it is really also an address to governments and finance ministers here in the region. It firstly, insurance firstly enables the economy to recover faster by promptly providing the necessary funds, for example, for reconstruction and for limiting the period of lower economic output. So that is important to bear in mind. The overall welfare costs of a disaster depend not just on the severity of the initial damage, but also how swiftly reconstruction can be completed. It is important to act swiftly after a disaster. The longer it takes, the worse it becomes. And this is really also that sufficient resources, in the absence of sufficient resources, and insurance and reinsurance can provide sufficient resources immediately after a disaster, but in the absence of this, that can also lead to supply chain disruptions. You see here a multiple effect. So insurers' payouts also reduce uncertainty, so they can immediately help to re-establish the economic activity, and they can also help to reinvest in reconstruction. That is also important. So they more or less also help to re-establish or to contain and maintain trust. And that also leads then to the financial sector to continue to provide loans, because they can be sure, okay, we are reconstructing, will get our money back. So that's really important. It also, it's the knowledge, we also have heard this, of the industry that is very, very important for risk mitigation. So we need to use the experience, the data, the collective knowledge of the insurance sector to fight against climate risk and climate change. And thirdly, what is important is risk transfer and risk financing, and this is also what Arup was very much fleshing out in his speech. So we really also need combined efforts on financing these disaster risks. Systemic risk, so that's the second point. It's not only the macroeconomic effect, it could also turn into a systemic risk, and that means that a local disaster could then really also have an impact on a broader region. So I think that is all sufficient reasons to deal with climate and climate risks, and the insurance industry is here really in the pole position. With this, I promise to you the IIS is already working on climate since a couple of years, and I put on a slide the previous publications that we had. So on a continuous basis, also together with the Sustainable Insurance Forum and with the Network for Greening the Financial System, we are working together and also producing papers. So the first issues paper, for example, in 2018 was published together with the Sustainable Insurance Forum. And we are focusing different subjects. The first paper is really also explaining what are the physical risks, what is a transition risks, and how can they be encountered. The second paper is already in 2020 focusing on financial disclosures. We can see here an accelerating action that are taken on disclosure everywhere in the world. That is really also important, and also the International Accounting Standards Board has taken care of disclosure, financial disclosures that are related. And that is not only for the insurance industry or the financial industry, it is for the entire economy. And that is also important if we as insurers need to disclose the risks that we have in our portfolios, then we also need to know what risks are borne by the other industry that are insured and taken care of by the insurance and reinsurance industry. The application paper, so that is now on supervision, so that is important for the regulators and supervisors here in the room. And in the last one, in our global insurance market report, so here it's about data. You heard from Arup, data are absolutely key. This is where we try to collect data, in particular on the asset side, and then did a first preliminary analysis of the global exposure on the asset side of the insurance industry with regards to climate-related risks. We will continue this exercise now also on the liability side, but as you can imagine, it is of course a challenge to get the data and also to get sufficient data quality when you get the data. So I think here we all together need to advance the data pool. What are we doing as the IIS? So I think you have heard already we are undertaking analysis, how the climate change is impacting the insurance sector. Then we are also promoting a globally consistent supervisory response. We are seeing that several bodies, such as the Financial Stability Board, but also the Basel Committee, all are now working on climate, and we really also need to work jointly together from a standard-setting body perspective so that we have a consistent approach and not that one body is doing the opposite of what the other body is proposing. So that is really a very important part of our work. And then, of course, we are also assisting in capacity building. Here, we are very grateful to our implementation partners, be it the Access to Insurance Initiative, be it the Financial Stability Institute, be it also the International Association of Actuaries, or the Toronto Centre, or the Asian Development Bank. So that's important. We wouldn't be able to do it alone. Scenario analysis is something I have on this slide and also on the next slide. Scenario analysis is a sophisticated but very helpful and valuable tool to see the exposures in your insurance portfolios. It is sophisticated, so we see that it is still under development, yeah? So it's not a methodology that is off the shelf and you can use it. It is still under development, and this is where we really use the collective knowledge of our members. We did so-called knowledge in workshop. That means we called for our members who have already done or are developing scenario analysis for climate in their portfolios, and then we more or less condensed the knowledge that we have gained in these knowledge in workshops to provide it to the other part of the IIS membership, to provide them with this knowledge, the so-called knowledge out workshops. And we have also been using these knowledge out workshops to transfer the expertise into trainings which are available on electronic platforms, be it from the A2I or also be it from the Financial Stability Institute, from the FSI. So we are really giving back what we have learned ourselves from those who have already advanced. And scenario analysis, just to give you a little glimpse, it is as if you would more or less move to a risk-based regime. It needs preparation. It is a project for itself. You need to think about the objectives. What do you want to achieve? And you also need to involve stakeholders, and you also need to communicate accordingly. Because in particular, with regards to the results that you will gain on the risks that are in the portfolio, it is really sometimes sensitive what you can see, and then it is important how you communicate. For example, when you wish as a supervisor certain activities in the portfolios of insurers and reinsurers, to be either reduced over time or where you are asking for transition plans. So that is sensible and needs very good communication, and also to explain what does this information and these data and the analysis results mean. So that is really just to give you an idea. It is not easy to carry out, but we are really also trying to spread the knowledge, how it can be done, and to support those who want to start with their first steps on climate scenario analysis. And here we also have recently seen in Latin America with the ASAL members. So ASAL is the Association of the Latin American Supervisors, and they have committed in a joint declaration to take care of climate risk, to promote analysis of the exposure in the portfolios, and then really also to foster risk mitigation and risk financing. So this declaration was a huge commitment from Latin American supervisors, to actively and proactively tackle climate-related risks. Here is a picture about the trainings. I have already spoken that we have different electronic platforms where a variety of training is provided for insurance supervisors. So, what are we doing from the IIS side currently in our current strategic roadmap? We do more or less 3 things and are embarking in a 4th one. The first one was, you know, we have the insurance core principles. They are really the basis for supervisors. They are universal, so they should be flexible enough, and they also allow for proportionality, and they should be flexible enough for tackle emerging risks, because we cannot rewrite our ICPs every time there is a new risk that is coming across the corner. So here, but we checked the major insurance core principles, how climate is captured by them, and whether we would need to be a little bit more explicit, so that supervisors are really also, seeing that, okay, here we need to do something. And that was an analysis that was taken, that was carried out in the last 2 years. And what we decided in the end is they are sufficiently principles-based, our ICPs, so they don't need a revision with regards to climate risk or cyber, but we will do updates in the ICP guidance and in the ICP introduction in particular, where we will explicitly refer to climate risk, because it's such a huge risk nowadays that it really deserves a special mentioning in the introduction. And we have just published our first consultation paper on this, which, the consultation period has just recently closed. So that means the only thing what we are doing here is to make it more explicit, but not to draft an extra ICP for climate, but to make it more explicit. The first consultation was just one in a row. There will be others upcoming, a second one still this year and the other one next year. So please provide input also from the industry side, because we also need to see is what we are proposing, does it make sense? Is it practical? Can it be also put into action from the insurance industry side? The next, so that was number 1, the comprehensive analysis, looking at our ICPs, which are the Bible for the insurance supervisors and are also assessed by the IMF and the World Bank in their FSUPs, for example. Here, climate-related risks really deserves an explicit mentioning, in particular also in the introduction, because of the relevance of the risk and the huge impact. Number 2 was data. This is what I already told you. We have done a special GMAR, a Global Insurance Market Report. This is where I told you we focused mainly on the asset side, but we have a so-called global monitoring exercise. One of our high-level goals is risk assessment and looking at the trends and what is and how the markets globally are developing. And this is where we also have data template. We collect information on a market-based level, but also from individual insurers. And in this respect, we have now also integrated certain climate data into this global monitoring exercise, also from the liability side, which is not easy. So that means year after year, we will be refining also the analysis, the data collection, the output, and everyone can then read also the results in our GMAR, in our Global Insurance Market Report. The recent one was published in December last year, and there are 10 pages on climate. But we also wanted that it becomes a regular exercise, a normal exercise, and nothing that has to be done separately or extra or is extraordinary, because that we also think that it is really then becoming also the mainstream of supervision. Thirdly, the climate scenario analysis work. I have already spoken about this, and that is really also something that will help to assess the exposure that you have in your portfolios. And very newly, we will also now engage in a disclosure work stream. So that means here in particularly, we will also put together what others have done and see the relevance to the insurance sector, because we can also see sometimes that what other standard setting bodies are doing does not 100% fit to the needs of the insurance industry. So we felt that we need also to look at this a little bit closer, but we are not going to reinvent the wheel, but we are really striving to promote also consistency, because here also in the disclosure, financial disclosures, you don't want to read 5 different disclosure reports just to see what the other than financial industry is having on climate exposure. That we would really try to avoid. The next slide is on the global alignment, which I have mentioned, but what is really also important is the collaboration and the cooperation of all the standard setting bodies. As I have said, the Financial Stability Board, the Basel Committee, also from the IOSCO side, so the Global Market Association, and also us as the IIS. So that's important that we are working together. The insurance protection gap, and that is the last part of my presentation. We are now really also examining what could be the role of the supervisor in addressing NatCat and disaster risk protection gaps. You have heard already a lot about protection gaps, but the question is really what can we practically do about this? And this is what we will address during the rest of the year. Voila. Yes, and here it's no surprise. So it's the risk assessment. So what the supervisors can do, they can provide for transparency and also for data sharing. So the supervisor can really play a role in getting the data in and then also aggregate the data and collectively sharing them, not on an individual basis, of course not. And that would help the entire industry of a jurisdiction or a region. Then public-private partnership. Here we are really on the risk financing side. It is most probably difficult for the industry to bear the risk alone. We have higher severity, higher frequency. So we need, I think, to think about layering. What is the part that the insurance industry can take? Then we would need to think about partnering and to talk about PPPs. And then we would also need to think about government support, but really more or less at the higher excess layer. So this is things that are currently also addressed in various countries and jurisdictions and from various governments. And risk awareness and reduction, I have already mentioned it from the consultation paper from the European Insurance Authority and the European Central Bank. That I think is really an asset that we have as the insurance industry. We have the knowledge, we have the risk expertise, and this is where we can also foster awareness, and we can really also promote risk reduction. And I always like to use the example from earthquake. So the insurance industry has contributed materially and substantially to the earthquake, to the construction building codes. And that made buildings also more insurable. So this is also something which we would like to see on the climate side. This is the work that we are doing on the protection gap. I only will tell you that we have issued a public statement recently, and that was also picked up by the G7 finance minister in Kamakura in Japan recently. It was referred to, and we are working here also together with the World Bank, the OECD, and also the Insurance Development Forum. This risk cannot be dealt in isolation. We need to collaborate. And that is my last slide, where I can, and you see, it is really also a good conclusion of what we are doing from the IIS side. It is really, enhancing resilience. This is what we can do from the IIS side and from the insurance supervisory and regulatory side. we can re-emphasize, and I think this is really important, that insurance and reinsurance can play a significant role in managing the financial impact of natural disasters. You have heard my reference from a macroeconomic perspective and then also from a systemic risk perspective. I think the more this is really also spread, this information and knowledge, I think the more also governments are becoming aware of the not only the social role of insurance, but also the role that insurance can play in climate-related risks and risk prevention and providing resilience. I think that's important. Then we have the public-private partnerships, the shared efforts. I already mentioned the disaster risk assessment and risk management practices. So this is, I think, where the insurance industry really has an advantage. And we are really committed to further supporting the insurance supervisors' actions to address protection gaps. So there are many colleagues, not only in the Secretariat in Basel in Switzerland, but also around the world from our member jurisdictions working on this, and we will also facilitate an information exchange at the global level and seek opportunities to collaborate also with other partners than those that we have, that I have already mentioned, such as the World Bank, the OECD, also development banks, and the Insurance Development Forum. With this, I would like to close my presentation. And I can only re-emphasize how important it is that we all together work proactively on climate-related risks. Thank you so much for your attention.
Thank you very much, Ms. Emanuela. Discussing around the same topic, may I please now invite Mr. Ronaldo Limbago, Regional Coordinator for Asia, Access to Insurance Initiative.
To the Chairman and Executive Director of NIA, its Board Directors, to all our participants, a pleasant good morning. And I actually want to thank NIA for giving me this opportunity to talk on this very important issue of climate risk insurance. And what I'm about to show you today is actually taken from a study done by A2II on the very same title, the role of supervisors in climate risk insurance. And I am going to present to you actually the key findings and recommendations which hopefully will give you some idea on the role really of supervisors in dealing with climate risk insurance. And my presentation actually has a simple structure. The first part, of course, will be like giving you an overview or a scenario on the current situation, particularly in Asia. Okay? This will be followed by the role that supervisors can play and what A2II in its resources can offer you to help you capacitate yourselves in terms of addressing climate risk and climate risk insurance. Okay? So, this is actually what's happening right now. Okay? As far as the impacts and risk in Asia, the observed and projected climate change impacts is that basically, well, right now we're taking a look, well, we're experiencing global warming right now. And the threat of heat waves across Asia will bring about droughts, floods, and glaciers in various parts. So I think right now we're very much experiencing this. Okay? As far as ecosystems are concerned, with global warming, it could cause actually a habitat loss in terms of biodiversity when the temperature goes up to 2 or more degrees. And I think we've seen that mangroves, marshlands actually losing ground, okay? And not to add man-made causes also. So given this particular thing, actually climate change is actually, how do I put this? Reducing actually much of our biodiversity and habitat loss, which will affect us actually. In terms of health, which is acting very important, climate change actually brings unpredictability, okay? So we could notice an increase in vector-borne and water-borne diseases, okay? I think you've noticed sometimes that mosquitoes actually would, really crop up at a certain point. And that point is something that, they're not supposed to be. But given the effects of climate change, actually, let's take the case of malaria. Okay, mosquitoes would suddenly breed at a certain point where they're not expected to. And this, of course, brings about increase in the incidence of diseases, okay, be it vector and waterborne. It also brings about mental disorders and allergy-related illnesses, which are caused by heat waves, flooding, drought, and air pollutants. Death, of course, could also occur, given the situation. In terms of water, I think we're all experiencing right now, given the heat and everything, there is projected to be an increase in drought conditions of anywhere from 5 to 20% by the end of the century if nothing is done really to mitigate this. Okay? As far as cryosphere is concerned, this actually refers to ice melting or snow melting, which actually I think is more related to this certain part of Asia. Okay? Such things actually will threaten the security of local and downstream communities in the high mountain Asia. Floods actually are projected to occur. Okay. Food security is of course threatened, given floods and droughts together with heat stress. It will have an adverse impact on food availability and prices, and I could actually recall that last year, I think Pakistan suffered this very, very same fate. First together with a very strong cyclone, and then followed by a drought, which prevented, of course, replanting. And so food security was threatened, and prices of basic commodities, especially food, actually went up. As far as energy is concerned, I think you will all agree with me that we just experienced a very, very hot summer this year. I'm from the Philippines, actually. And our summer this year was surprisingly very, very hot. And with, of course, the increase of temperatures, the demand for energy also grows. Okay? So more air conditioning, more cooling, okay? And coupled with population growth, this actually depletes much of our energy resources needed to produce energy. Okay? Cities and settlements, I think this is very self-explanatory. When floods, earthquakes happen, damages to infrastructure and disruption in services also take place. Okay? And migration, okay? There is strong evidence to support that climate variability and extreme events are actually driving the increase in migration. I mean, if a place becomes less habitable, people will tend to go to other places, okay, which will provide them, let's say, more security, more employment, okay, and of course, well, basically where they could live, where they could transfer, okay? And longer climate change will increase mitigation mitigation flows practically across Asia. So basically, some areas will no longer be habitable and people will tend to converge in just certain zones, again, depleting resources, okay? And probably contributing also to increasing carbon emissions. Now, given that particular scenario, you could already see that Asia, well, it is, among the 7 continents in the world, Asia is probably the most vulnerable to the impacts of climate change. Okay. And given that, actually, there is data that reveals a huge protection gap as far as Asia is concerned. Of the estimated 202 billion losses globally, Asia accounted for 1/3 of these losses, 71 billion, with floods basically as the major peril in our continent. And then actually a Swiss ResSigma data found that of the 19 disasters in 9 Asian countries over the last 10 years, it caused losses of 140 billion, casualties of more than 35,000, and 200 million people were left homeless. And sad to say, of the 140 billion losses that were experienced, only 20 billion, or roughly 14%, were insured. Okay? And this covers all sectors. And as expected, the vulnerable ones, particularly the low-income communities, were the hardest hit by the impacts of climate change in Asia. Okay. Now, let's go over to insurance and relating it to climate risk. Given the various effects of climate change, actually, disaster risk reduction and management has actually become very important. And in this particular aspect, insurance is actually just one piece of the entire DRR puzzle. Okay? If you take a look at it, actually, well, they would say that insurance is an option of a last resort. Okay? If there is already, let's say, in a community, if the risks are identified, okay, through understanding what risks they are, hazard mapping, and they are prevented or mitigated, of course, then the risk associated with certain climate risk will actually lower down. Insurance actually is, well, I could say that insurance is more appropriate for addressing residual losses brought about by low frequency but high intensity events. Okay. Those events which are actually happening more often, but the severity is not that much, could be addressed by, let's say, better preparedness and the post-disaster response and recovery. Okay, like building better infrastructures, planning, education of the people, and awareness. Okay. So, as I said, insurance is basically just one of the disaster risk reduction piece. But it plays, of course, an important role. So it's not all losses could be, well, because insurance actually does not really reduce the risk, but actually only transfers the risk, okay? And that's the importance of insurance in this aspect. As I mentioned a while ago, what I'm presenting to you were taken from a study of the similar title. And addressing climate risk and building resilience actually is a collaboration from various sectors. And in this case, actually, from the study, we could see that the industry has a big role in addressing climate risk resilience. The first, of course, is, well, to offer the relevant products. Okay. By coming up with the appropriate products needed by the target sectors. Actually, insurance gives this certain, how do I put this? Yeah, it actually gives a, what's the word? Yeah, a peace of mind, okay, to policyholders, since actually it assures them that whatever losses they get from natural disasters will be indemnified. And with this, actually, savings could be accumulated since, let's say, individuals, households, or MSMEs will not resort to other financing mechanisms in order to address the losses that they experience in a natural disaster. The industry actually could also provide complementary, tangible, what we call resilient services that address or reduce vulnerability. Actually, this goes beyond the offering of insurance itself. When we say resilient services, a good example, let's say, is when providing insurance, you could go beyond that and, let's say, assist your policyholders or, let's say, even potential policyholders, let's say, in coming up with a comprehensive disaster risk approach in order to reduce their vulnerabilities. Okay. The insurance industry, could also lend expertise to initiatives beyond insurance to promote risk understanding. Actually, the succeeding bullets, if we're going to put it generally, is the insurance industry has a lot of confidence, has a lot of information that could be actually used to advise, to consult, let's say, policyholders and other stakeholders in order to craft better responses to climate risk, be it in the form of laws, policies, even in urban planning and infrastructure. The insurance industry actually has this data, has this information, and has this competence. Okay? So what I'm trying to say here is insurance could actually inform policyholders on how to, let's say, come up with better policies or laws concerning climate risk and climate risk insurance. Okay. They could better articulate the issues concerning this. However, even given, let's say, the position of the industry's willingness, industry actually experiences certain barriers as far as climate risk insurance is concerned. This is taken from a survey, a Menti survey done by A2II, where there were 47 industry representatives with a simple question of, did you face any regulatory barriers in designing solutions to promote resilience of the underserved population against climate and catastrophic events? And the answer was 77 of them said yes, we do experience barriers. Okay. So these barriers, of course, need to be addressed before we could move further on. Okay. And just to, Okay. And just to show you what are these main regulatory obstacles that the respondents actually said. One is that index insurance is not allowed. I mean, there is no clear regulation that defines and allows index insurance, okay? And this discourages actually the supervisors, the regulators, from further approving such products, okay? Related to that is the hesitance to approve innovative approaches. Climate risk insurance requires innovative products, innovative approaches. And without the clear understanding of such a complex matter, they, of course, become hesitant to, let's say, to move or to quickly process such applications for, let's say, for products related to climate risk. Okay. Alternative distribution channels are not allowed. As I mentioned, climate risk insurance products require, of course, innovation. And with innovation comes, of course, innovative distribution channels, which the regulation might not provide for. Okay. And this affects, of course, the offering of CRI products. There are limitations due to the process of digitalization, like e-signatures, e-contracts. They might not be having these kinds of provisions. Okay. And in some cases, in some countries, taxes are imposed on CRI products, and this in turn makes a product that is supposed to be affordable not affordable. And then lastly, restrictions on reinsurance transactions. There could be, let's say, taxes could also be imposed. There are restrictions on cross-border reinsurance. This discourages reinsurance, and reinsurance is an important part of CRI, actually. We also did I'd also like to show you, actually, a short survey that we did on the MEFIN members way back, I think it was 2021, 2022. MEFIN is actually a network. It stands for the Mutual Exchange Forum on Inclusive Insurance. It's composed of 7 countries. And our question was almost related to what I showed you a while ago, which basically is what issues are hampering the integration of climate and disaster risk. And you could see from their answers that they're very much related to the first set of obstacles that I showed a while ago, like the lack of robust granular data and models to support product development, okay? The lack of national laws, and then the reluctance of insurers to develop CDRI products due to cost in putting up the product into the market. Okay. So they are very much related to the one that A2II did, if you take a close look at it. So I already gave you the scenario. Now we go into, okay, what roles then can the supervisor play as far as your climate risk insurance is concerned? Well, regulators actually can stimulate supply by enabling risk carriers within the domestic insurance market. This, of course, will entail capacitation of the industry. Okay. Actually, in this particular case, I'd like to cite the case of Nepal. Nepal already actually has a, if I'm right, Nepal is some sort of a Nepalese insurance institute or academy, which actually offers capacitation to those in the insurance industry. okay? And capacitate, and actually, if there are enough funds, actually, to focus capacitation on the issues which related to climate risk insurance, then probably it could be targeted on that. Okay. So what I'm just trying to say is maybe in this particular case, focus on on the issues affecting climate risk and climate risk insurance could be given attention as far as capacitation of the various industry members are concerned. You could give room to test innovations. Okay. One of the, I think one of the most common innovations that we could do is, let's say through pilot programs. There are a lot of pilot programs already here, and we could take lessons from pilot programs done in inclusive insurance. But pilot programs normally have a beginning and an end. And the thing here is that if you're going to, let's say, launch a pilot program, there should be a certain strategy attached to it, okay, which will provide for the upscaling of a program, okay, to make it, to have a better access or reach to more potential beneficiaries, not be confined to that certain area. I think yesterday we showed I think we saw the presentation of Naval on index insurance and the various pilot approaches that they have done, the various pilot initiatives they have done, which are actually good. And I took note of one which they're actually going to upscale, okay? And that's actually one way to test innovations, okay? Give room for innovations, okay? And address demand constraints related to awareness, trust, appeal, culture, and affordability. This could be tied up to, let's see, just give me, I'd like to give an example. In microinsurance, actually, the financial literacy awareness programs actually form a crucial part in increasing the access and uptake of microinsurance product in the Philippines. Actually, this could be the same thing, but this time with climate risk actually integrated already into the program. It is important to make the people aware of the various issues and of climate risk, and that there is climate risk insurance, for them to understand what it's all about, and to encourage, of course, the uptake of products. Okay, supervisors could also catalyze action to strengthen resilience against climate risk and act as a bridge and communication catalyst between policymakers, the insurance industry, and consumers. What we're trying to say here is that actually supervisors, regulators, are in a good position to shape the contribution of the industry, okay, to the formulation of, let's say, of policies related to climate risk and climate risk insurance. Actually, supervisors have this unique, I would say a unique feature that allows them, of course, to navigate the important stakeholders in this particular case, policyholders, the industry, and the consumers itself, in order to articulate, let's say, issues concerning climate risk and climate and resilience, okay? And then, hopefully, through this, efforts in coming up with a more concrete and harmonious, let's say, interventions as far as climate risk is concerned could be done. So basically, the supervisors actually have this particular, let's say, ability to, let's say, to convene all the important stakeholders so that their interests are actually aligned as far as climate risk is concerned. Okay. And so given those things, I will not try to show you the resources that A2II has as far as, enhancing the roles of supervisors in climate risk insurance is concerned. This is actually the study that was done by A2II. And actually, you could access this if you want to know more, because what I showed you a while ago was basically just some certain excerpts, which we feel would be important for you to know. And as of today, actually, as I mentioned already, A2II is in the business of improving the capacities of supervisors. And this is what we're offering right now at the moment. We have the Connect A2II, which is the e-learning platform. Here you could access our webinars related to climate change and various training modules, okay, like the supervision of climate-related risk in insurance sector. We also have in our website the Knowledge Hub. These are publications which could actually provide you with more information as far as climate risk insurance and supervisors are concerned. And in 2018, this is actually the study that I just presented a while ago. We also have something on indexed insurance, which was done in 2020. There is the A2II UNCDF Indexed Insurance Best Practices for Insurance Regulators and Practitioners for the Pacific Islands, which was actually shared in yesterday's session. And last year, we have a video recording of the regional dialogue focused on Asia on the role of insurance and data in closing the climate risk and protection gap. So this is what we have. There are actually some more you could find in our website. And yeah, you could just access us, okay, through our website at A2II. And we also actually make announcements on our various activities and initiatives. So you could follow us on YouTube and LinkedIn to know more about what offerings we have, particularly if your interest is actually not only on climate risk, but on other aspects pertaining, of course, to the capacitation of supervisors. Okay. So with that, I'd like to close my presentation, and hopefully this gives you some information or some tips on how to deal, of course, and basically what supervisors could contribute as far as the climate risk insurance and building the resilience of the vulnerable sectors is concerned. So thank you for that.
Ladies and gentlemen, we'd now like to open the floor for some question and answer. So if there are any questions or queries that you have for the presentation, for the points brought forward by Ms. Manuela and Mr. Ronaldo, you can definitely ask them your questions. We have our volunteers with our mics who are just around, so if you can just raise your hand if you have any questions on the topic that they just presented on. We have our volunteers who will get you a mic, and then you'll be able to put forward your question to them, your thoughts, maybe even your views, some challenges that you've personally faced when it comes to this particular topic.
My name is Warave Chalasin from Thailand, from the university. It's called Asian Institute of Technology. It's not a question, but just the idea that in this forum, I have not heard that how the research centers and universities can play the bridging role of the supervisors and businesses and the association. Reason being that at the universities, they have the know-how and also they have a kind of a technical ability to bridge these things. Say, for example, the in-depth study about the climate change, the assessment techniques, the vulnerability assessment of those of that. So I think it is the opportunity for the regulators to work closely with the universities and research center in the country so that they share the know-how, how the risk can be assessed based on the in-depth study of particular subsector. Thank you.
If any of our participants would also like to share maybe similar thoughts and opinions, we would like to open the floor, and the floor is definitely open. We have our volunteers ready.
This is about the climate risk survey which we did recently. In that context, what we could notice is the amount of awareness about the climate risk and the impact of the climate risk to the portfolio is not necessarily there in the life insurance sector when compared to the non-life or general insurance. That's what we observed at one survey. And the second part of it which we have observed is that what is the driver, like encouragement for insurance companies, in particular the life insurance companies, to move towards gathering and making things possible for them to keep ready for this climate risk, because they all believe that it is more so of a non-life risk which is very much visible. Though life sector can have this investments, and as investor it can deal with the climate risk, but maybe there is a need for this regulatory forums and international supervisors to build that framework for life insurance sector per se. Thank you.
I go first. No, thank you so much. I'm really grateful for this question. You are right. At the moment, we are focusing a lot on non-life, on the P&C sector. But the life sector and the life and health sector can also be affected by climate-related risks and climate change. So what has currently started is the work on, for example, biodiversity. So that could then also really have an impact, on diseases, on food supply chains and things like this. So that work is in its infancy. But what we have seen already in 2003 in Europe was a heat wave that was unprecedented and that never existed before. And 10,000 of people, mainly of older age, died. Yeah, it was in the month of August, and we have seen similar effects last year when there was another very, very hot and above, I think, 2 degrees above the average temperature. So there is an impact also on morbidity, so that certain diseases could become worse, or that people cannot get the treatment that they would need it because of the heat waves or death, simple death. Yeah, people are dying because they are dehydrated or any other effects. So yes, you're absolutely right. I think we would need to raise the awareness also for the life and health and to do more analysis there. Yes. Do you want to add something? That's true. Thank you for the question.
Hello. My name is Vijay and I'm from Himalayan Everest Insurance. It's not a question exactly, but some sort of curiosity. Since climate change risk and climate change disaster, the disasters it brings in is a global phenomena, I'm just wondering that is there some sort of cooperation between countries as such across the border to share information and to have basic, you can say that basic requirements that how should they move ahead so as to mitigate this risk, and then basically keep people's faith in insurance industry so that when there is a bigger disaster as such, they are not lost somewhere. Now, I was basically wondering whether there is some sort of mechanism to share information amongst the countries regarding climate change risk and what should they do at a minimum level as such, number one. It could be, for example, when you take example of Nepal as such, whatever we are doing on a firm level. We are doing at a company's level as such. There is no, you can say that, no requirement at country level or something like that. So whether there are similar provisions in other countries or is it specific to a particular region?
Okay, sorry, I will repeat the question if I have understood it correctly. So for me, it was really more about an information sharing platform or opportunity to see whether in a certain region, what are the experience of others, or what do they already have basic requirements in place, or do they already have practical solutions to the risk. So that is what I understood as the question. So,
I'm not a position.
Okay. Then, no, we have, for example, what we are doing is at the IIS, we have a so-called climate risk steering group. That climate risk steering group at the beginning, because we wanted to advance quickly with the topic, it had limited membership, but now we have opened this membership, and we have also seen that additional IIS members from EMDE jurisdictions have joined the climate risk steering group. They have 3 and now 4 work streams underneath it, and they can also send members in these work streams. And in particular, the example of these knowledge in, knowledge out workshops, there were really good platforms to exchange the information. But I'm also aware sometimes I know that, staff is not so numerous in certain regions, so they cannot send 3 people to 3 work streams. What we have seen is, for example, ASAL, so the Latin American Association, they are more or less also, they are sending representatives in different work streams and different platforms of the IIS, and then they are more or less bundling the information and spreading within their own association. So they more or less function as a kind of messenger and channel to distribute the information. And here in the region is AFIR. So it's the Asian AFIR, Forum, the Asian Forum for Insurance Regulators and AFIR members, so they have also annual meetings, and climate is really on top of the risk. And we have colleagues here from the Maldives. So the Maldives Authority was organizing a fantastic meeting last year in September, and climate was at the very center of these activities. So AFIR is a really good platform, and climate is a topic that they have selected as a strategic topic. So that would be AFIR and ASAL as regional forums and organizations. And last but not least, we have the Climate Lab. So I can now promote the Climate Lab of the A2I, but that is restricted usually to just 4 countries. And the last lab was on climate. Yeah, so it's an inclusive insurance innovation risk, and there the A2I is receiving applications, and I think we are now also preparing for the next lab. And the third lab was a climate lab, and the outcome, it is a longer, or it is a midterm engagement for a year and a little bit more than a year, up to 18 months, and supervisors that are participating in the lab, they are developing products that suit their own market. Yeah, and for example, Argentina, we had really quite good outcomes also for Argentina, which they are also now using, and where they are also promoting certain products. We also had the farmer's basket. I no longer remember which country it was, but maybe Pascal knows. They developed a specific insurance for agricultural insurance. Yeah, I think it was Costa Rica, if I think about it, and then there was also another one from Africa. So that is, I know it's limited participants, but also an opportunity to learn from each other, but also to develop their own products. And then we have dialogues. So at the A2I is organizing dialogues, regulatory dialogues or public dialogues, where climate also, of course, plays a role. And in these dialogues, they are really open, yeah, also for non-IIS members. They are really open. You just have to register via the A2I webpage. Usually you have presentations from, to share experience from different countries all over the world, and then you have a discussion. The dialogues only take an hour, and then you can still catch up with certain people that were presenting if you want to know more, for example. Yeah, so the dialogue is really also bringing together also usually between 50 and 100 supervisors on a particular topic. And most probably we need to put also climate very high on the agenda. So those are just examples. Maybe there is because of Thailand, there is an association, I just forgot the name, which is bringing academics, university from the regions together, supervisors and industry together. That exists here in Asia, because we heard it from Thailand. And is also inviting, and climate is high on their risks as well. Yes, so it exists. I just forgot the name. Do you remember? Maybe someone in the room remembers the name. So Global Insurance, GAIF. Yeah. Forum at the end, I think, as well. Okay, you can take the question. Okay.
We'll do the last question for this session, sir.
Regarding climate change, particularly in health insurance, especially hospicash or hospitalization, the Southeast Asia recently facing high hits actually, all the countries they are facing. So existing health rate, particularly tariff rate, the insurer, if they sell their product in the existing rate, then they will face losing. So what should be the role of regulators to help the insurer and at the same time to understand the buyers of the insurance products? How should be the awareness of that?
Okay. There is a simple answer, risk management. So, because this is really what is the role also of the supervisor. Really to supervise the risk management of the insurer, to also have forward-looking, such as, for example, in an ORSA, you have forward-looking scenarios, and all these together, I think then also the supervisor definitely can help and provide also challenge. For the tariffs. If it sounds like it's not adequately priced. And if it needs to be adequately priced, then it's really also a matter of risk management, whether all the factors are considered, and if and maybe then also other solutions than individual insurance products could then also play a role, where then the supervisor, as Ronnie has said it, so the supervisor can also be a center, to bring different parties together, for example, in public-private partnerships, So those would be a spontaneous answer, but the key is really the risk management, because the insurer, in a risk-based regime, the insurer is supposed to take into considerations all material risk, and also in a forward-looking perspective. And this is where I would consider the supervisor to have a challenging function in this perspective.
Thank you very much. With this, ladies and gentlemen, we conclude this first session, which was the focus on climate change and role of insurance supervisors in climate risk insurance. May I please invite our chairman of Nepal Insurance Authority, Mr. Surya Prasad Silwal, to kindly join us on stage to present this token of love to Mr. Ronaldo and Ms. Manuela. Thank you very much to Ms. Manuela Zwemuller, Head of Implementation, International Association of Insurance Supervisors, for highlighting the various climate risk insurance aspects. And we would also like to extend our gratitude to Mr. Ronaldo Limbago, Regional Coordinator for Asia, Access to Insurance Initiative, for also bringing forth various points on climate change and role of insurance supervisors in climate risk insurance. With this, ladies and gentlemen, we come towards the end of the first session here at the second day of Asian Insurance Meet 2023. We'd like to request all of you now to kindly head towards tea and coffee break. If you haven't yet had your morning cup of tea and coffee, we'll see you in 20 minutes back at the hall. We have the tea and coffee right behind this hall. You can see the doors are already open. We hope to see you in 20 minutes for our second session, which is on capturing the climate change opportunity. Capturing the climate change opportunity, the role of insurers and reinsurers. Ladies and gentlemen, may I please request all of you to kindly come in and join us. हाम्रा सम्पूर्ण अतिथि महानुभावहरूलाई कृपया हल भित्र आइदिनका लागि हामी विनम्र अनुरोध गर्न चाहन्छौं. Ladies and gentlemen, we are a bit tight on time as we have a gala dinner today in a different venue. So we have to finish on time so that all of you could be safely transported in time to a venue that is really beautiful for the gala dinner. And because there is some time that we will require or for the journey towards gala dinner, I would like to request all of you to kindly come in and settle down so that we can begin with the second session. I'd like to start by inviting our moderator on the stage for this session, Mr. Arup Chatterjee, Principal Financial Sector Specialist, Asian Development Bank. May I please invite sir on stage to join me. He'll be moderating this session on capturing the climate change opportunity, the role of insurers and reinsurers. And since we have many different representatives from various insurance and reinsurance companies, I'm sure this session is definitely going to be a very, very insightful one. May I please also invite our presenter, Mr. Chandra Sekaran Ramamurthy, Chief Executive Officer, Himalayan Reinsurance Company Limited. We are delighted that you've been able to join us, sir. I'd also like to invite our panelists on stage, Mr. Uday Raj Adhikari, Director, Pivot Risk Limited. Mr. Deep Prakash Pandey, CEO, Shikhar Insurance Company Limited. Mr. Nirmal Kalji Shrestha, Vice President and GM, MetLife. And we'd also like to invite on stage Ms. Poojan Dungil, Director, Nepal Insurance Authority. Ladies and gentlemen, the stage is all set, so a humble request to all of you to kindly come in and join us as we plan to begin the second session, capturing the climate change opportunity, the role of insurers and reinsurers. Without any further delay, I'd like to hand over the proceedings of this session to our moderator.
Welcome back to the session now, and thank you for this great introduction. We have a galaxy of experts today, and we will start with our presentation on which will be made by Mr. R. Chandrasekaran, and following that we will have a moderated discussion, which I am delighted to moderate. And we will also have some opportunity to throw some questions or get some questions from the floor. They can throw it to the panelists. I have the pleasure of moderating and not answering today, so look forward to getting more questions from your side. So over to you, sir.
Yeah, respected Chairman of the Nepal Insurance Authority, respected Executive Director of the Nepal Insurance Authority, Nepal Insurance Authority senior officials, Nepal insurance industry executives, chief executives, officials who have all assembled over here, international regulators, international delegates, my longtime friend, Mr. Arup Chatterjee from Asian Development Bank, the earlier session speakers from IAIS and AII. I'm extremely happy and, first of all, thankful to all for giving me the opportunity. And I'm extremely happy to see that in Nepal, international conference of very great importance is taking place under the auspices of ADB, NIA, and IAIS. Arup has already given a complete, I would not say synopsis, complete detailing of all the issues connected with climate change. From a person who is associated with Nepal insurance industry as a CEO of a startup reinsurance company here, I take this my opportunity to present my views on the topic climate change, threats and opportunities for reinsurers and insurers. First of all, we all know climate change is real. It's not something which we are talking in the air. And it is actually influencing all the weather-related disasters. The risk, earlier we used to think of only natural disasters. In fact, from 1987, I have been specializing in natural disaster accumulation control. And I used to focus only on that. In the last decade or so, or even little more than that, but last decade is more prominently, we are hearing climate change. And this climate change is not only affecting the major natural disasters, but it's also triggering smaller, medium-sized and smaller disasters localized, and they cumulatively give more losses to the insurers and reinsurers than the natural disasters. For natural disasters, many companies, modeling companies have come, they've gone into the geophysical characteristics, they've gone a lot of research and data analytics, and come out with the model. So natural disasters per se are modeled. So we have some safety or somebody to blame, or your model did not predict this. But when you come to those climate-related disasters, we are still worried. It is not modeled. But in Nepal, I know how many times flash floods come, how many times landslides arising out of flash floods come. And those losses will be 1 crore, 2 crore, 3 crore, or 5 crore. But when you put all of them together, the insurance industry is bleeding. And whether the reinsurers are covering that, most of them may be below the deductible of the first layer of the Cat XL program of the insurance companies. So, climate change, climate is always changing, and there is no climate change. Interestingly, today's paper, I was reading the Himalayan, they talked about El Nino. Very, very aptly, they have described the problem. What they are saying is, normally El Nino is supposed to reduce or mute the hurricane season in US, or the impact of that. But this time, because of early setting, they say it could create much bigger problem of global warming. And when you say this global warming is there, we are not talking about the natural events, we are talking about greenhouse gas emissions and the atmospheric pollutions that are caused by human activities. The most important point here, human actions alone and actions or omissions are causing increasing warming of atmosphere, ocean, and land, and causing changes in the atmosphere. There are overwhelming scientific evidence to say that global warming and the role of greenhouse gases. There's some data which I picked up from Swiss Re Institute. It is 2020, but still relevant. I would like you to look at the rightmost column where the natural catastrophe insured losses of US dollar 81 million, and there the secondary perils, which I was talking about a little earlier. Secondary perils are those events which happen more frequently and which are not modeled, and they have cost $57.4 billion. 71% of the NatCat losses in 2020 was related to secondary peril events. And secondary peril events are directly caused by or impacted by the global warming actions or omissions of all of us. flash floods and floods. The most underestimated natural hazard. That's what Munich Re is saying. Most underestimated natural hazard means that you have not been able to estimate it any time correctly. Tropical cyclones. This is the hazard which gives the highest insured loss. No, therefore, whether it is flood or cyclone or wind related or the water related, they have increased. The tropical storms or cyclones, depending upon whichever region, they have been accompanied by extreme precipitation and indicate that the proportion of severe storms is rising, proportion is rising. What is its impact? Arup talked about protection gap. 10 years ago, people used to talk about Swiss Re and other people used to talk about protection gap, protection gap. He pointed out that I think 92% of the losses in the Asia Pacific region countries are uninsured. So even if I have a catastrophe XL protection, or even if somebody is insured and I pay, I am only paying 8%. But in the case of Nepal, I had a small study, I don't know whether right or wrong. I may be wrong, please correct me. The Nepal earthquake 2015-16 is cost a 25% economic loss. But of course, the insured loss were very low. So poorer countries or emerging countries, they are more affected by these losses because of the protection gap. Because of the protection gap, in the last 10 years, only 5% of the losses are covered. Maybe in advanced countries it is 50%, but in poorer countries, only 5% of the losses are covered by the insurance industry. I quickly skip this scale. This I have already dealt with, primary and secondary peril. Events with high frequency and low to medium severity. The secondary effects follow a primary peril, less severe natural events such as flood, bushfire, and so on. They receive less monitoring than catastrophe event. The impact of secondary peril is not fully captured, especially when developing or emerging countries are concerned. Greenhouse gas emission. I thought, maybe for some of the people who have really not understood what this greenhouse gas means, I picked up a Munich Re website video. Can we press the link, please? And then you have to press again. Is there internet connection? Yeah, leave it. We can close that. If I press, I'll go to the presentation. Will it go? Yeah. The main greenhouse gas, whose concentration are carbon dioxide, methane, nitrous oxide, hydrochlorofluorocarbons, and hydrofluorocarbons, and ozone in the lower atmosphere. We are also talking about UV and things like that. Greenhouse gases act similar to the glass in the greenhouse. They absorb the sun's heat, that radiate from the Earth's surface, trap it in the atmosphere, and prevent it from escaping, and it keeps the Earth temperature warmer than it would be, supporting life. But the changes are expected to include a warmer atmosphere, a warmer or more acidic ocean, higher sea levels, and larger changes in precipitation patterns. The extent of future climate change will depend on what we do now to reduce greenhouse gas emission. The more we emit, the larger future changes will be. It has been found that automobile emissions are contributing the highest percentage of greenhouse gas emissions here. See here. This is again from Munich Re. Last 200 years global temperatures, it is keep on increasing. You see the percentage on the side. The global temperatures have warmed up to 1.2%. The last 9 years have been warmest. The last 3 years, 2022-22, has been characterized by La Nina. La Nina is the opposite of El Nino, which has a cooling effect on the temperature. But now the El Nino has started, and it is going to increase the temperatures further again. If you see this graph, this is from Hannover Re. This graph shows very interestingly both actual and the simulated global temperature over the last, I would say, 170 years, more or less similar to the earlier graph. It says that warming of 1.5 degrees will be reached, even exceeded in this decade. And you see the simulated brown color on the top. The simulated human and natural values could be within that range. Therefore, unless human being we act to start reducing the greenhouse gas emissions, we are going to have catastrophic effects on the global temperatures. The effect of this global warming, there are many points. There are 10 points. I don't want to go into reading all these things. I stop here for a minute to say, I have put all these slides up to 12 slides to bring the focus on the losses that happen to the insurance industry and what is going to happen, more losses are going to happen to the insurance industry, to bring the gravity of the situation before all of us. Insurance plays a major role. But in advanced countries, they mitigate the consequences of changing climate. But in an emerging market like ours, insurance is still not able to make the same contribution, despite that the natural disasters disproportionately affect the people in the emerging countries. The damage costs are rising over the last 30 years and is likely to increase further. So, the word resilience is being talked about, even in the theme of the conference. Increasingly unpredictable natural weather brings the challenge of adapting to environmental change and building what is known as resilience, the capacity of the system to absorb the stress that is brought by the climate change. And therefore, we are looking at the role of insurance as a to bring the resilience to the economy, to the country, and to various components of the economy. Impact. Number of times in the morning, we have heard about physical risk, transition risk, and there's one more risk which I thought has got missed, or maybe included in that, liability risk. the liability risk is most relevant to general insurance companies because there could be third-party claims from parties who have suffered due to the negative impact of climate change, and they will go and start suing those people who are directly responsible for their liability. That we have to wait and see how that liability element gets added up. Impact on insurance and reinsurance. Both insurers and reinsurers here. Number one is underwriting risk. We end up estimating the losses. I said in the beginning, underestimated floods. When you are using historical data, when you are using incomplete models, when you are putting incomplete assumptions in the models, what will happen? The biggest question that is coming is whether these events will become insurable in the long term. If this keeps on increasing, will the insurance company walk away? Or will they say, I'm not going to insure this, let the government take care of it, let some other person take care of it. The level of confidence in the risk assessment, whatever assessment we are making, are we assessing it properly? Whether my assessment is right. When I am buying a catastrophe XL protection for 1 in a 200 year, have we assessed it properly for the flood or for the earthquake or whatever? The confidence in that level will not be there. And which perils are affected, which perils are not affected. So now, these are all impacts. Let us look at what insurers think. I picked up two statements. One from a CEO of a major French company, which he made in 2015. He said, a world warmed by 2 degrees, we are talking about 1.5, we talked about 1.2 in the graph. A world warmed by 2 degrees Celsius might be insurable, but a world warmed by 4 degrees certainly would not be. That reinsurer is saying, this is the threat. Whereas another reinsurer in the same continent is saying, if we can manage the liability, if we can know what it is, we can still put our capacity and we can even cover risk in high-risk zone. So there are two reinsurers, one trying to highlight the threat, the other trying to say there is an opportunity, so I can cover. So that opportunity is potential positive impact, efforts to mitigate and adapt to climate change, and climate-related opportunities will vary depending upon region, market, and industry where an organization is working. Certainly, there is unanimous agreement that climate is changing, mainly worry about severe weather events. More severe natural events makes more cost. Major human impact, including pollutants and GSGs. If properties become uninsurable because of climate risk, mortgage providers would refuse loans. Home values will fall, and people will begin to move away to some other place. Once they do, the tax base will go for the government, negatively affecting the school, fire department, and other municipal services. The people who cannot afford to move would be left behind, trapped in a community that continues to deteriorate. If we do not curb our greenhouse gas emission, climate change would eventually present insurance companies with the risk that they can no longer afford to underwrite. Opportunities. Opportunities are there, definitely. Improving awareness of climate change risk and providing expert advice to mitigate. One such opportunity is to influence the regulations that are in place for building codes, to strengthen flood defenses or reduce climate hazards. developing innovative risk transfer mechanism we have talked about in the morning. There are opportunities for insurance companies to develop new products for renewable energy, solar farms, and so on. There can be products which can be green products. For example, in India, I think they have started, maybe here also, maybe there, for the motor, pay as you go. If you don't use the car, don't pay. They reduce the premium. So start measuring by milometer or some other method. In Germany, they tried to put, saying that we will put a GPS and we'll measure. But that became a privacy issue. Insurance industry is traditionally a significant active institutional investor. Suppose they invest in projects that have positive effect on climate. Insurers can play a role in shaping and driving products for flood defenses and infrastructure, which I think Arup very clearly said. And coming to the industry association, they should make, as somebody was mentioning in the morning, regulators are committed. Therefore, even industry associations should commit that they will make X percentage of investments in climate-related positive opportunities. I'm coming to the recommendations. Reinsurers and companies should identify climate risk, keep track of all scientific findings for risk assessment, modeled peril, do adjustments in the CAT models, review adjustment for the loading for secondary perils, take the regional patterns into account, examine historical data, whether there are similar losses in, that would impact, like urbanization, how much more exposure is coming, account for local risk prevention measures, and engage with dialogue with regulators and authorities. What about parametric solutions? Why can't we do parametric solution? And also, coverages for water supply, carbon emissions, power outages, and so on. There are many prospects for developing insurance in emerging markets, and it will depend on multiple factors. So we need to understand the risk, capacity of the insurance customers to bear the product cost, regulatory infrastructure and transparency, and reliability and ease of which the claims can be paid. More fundamentally, emerging markets insurance is still seen as a luxury good with lower priority than food, shelter, and savings. Governments have made big strides in increasing, giving financial literacy, etc., but the penetration is still lacking and it has to go. My concluding remarks. Climate change does not create challenges and difficulties, but it also gives opportunities through risk management, innovative insurance products, encourage investments in renewable resources and risk management. New technologies in the field of power generation, transport, energy, industrial productions are needed. The focus for us, therefore, is on devising insurance solutions for these technologies in order to facilitate their market entry. The crucial question to be answered is whether and how the risks in insurance investments are changing. The next step would be to develop loss mitigation solution in the form of risk transfer through insurance and portfolio management for investments. Thank you for the opportunity given. And I conclude by saying all the threats will have to be converted into opportunities, and all the stakeholders will have to work together to find out quick solutions so that we don't see the temperature rising beyond 1.2. Thank you.
Thank you, Mr. Chandrasekaran, for providing your insight on this very important topic. Clearly, as Mark Carney, the former governor of Bank of England, in his speech, which has now become famous, the tragedy on the horizon, climate change definitely is one. And of course, You also highlighted the risk and opportunities, and as the Chinese say, risk and opportunity are two sides of the same coin, and therefore we need to see as the glass as half full and not as half empty. At the same time, what I've been hearing yesterday and today also is a lot of expectation from the insurance regulators in terms of showing the path forward. And sometimes I feel, having worked in the insurance regulatory system for some time, there's a tendency to abdicate the role to some extent to the insurance regulator. The insurance industry perhaps also needs to play a role in terms of partnering with the regulator rather than waiting for advice and instructions from the regulator always. But let me start today's session by asking the first question to the regulator on the panel. Poojan Dungal from the Nepal Insurance Authority. Ma'am, what are the initiatives the Nepal Insurance Authority is taking in terms of climate-related issues, and what are the challenges you are facing?
Thank you very much for the question, sir. Actually, in the presentation of, in the previous presentation, he clearly mentioned about the protection gap and risks posed by the insurers regarding the climate risks. And as a regulator, it is our duty to ensure that the insurers and reinsurers have proper risk management tool in order to identify and assess the climate-related risks. And at the same time, we also know that in our sector, the capacity building of the regulator and the insurer is equally important, because we don't have too much experts in this field in our jurisdiction. So as a regulator, I think we have already done something. We have already issued the directive regarding the climate risk disclosure and the risk-based capital directive as well, in which some of the portion of climate risks are also included. And we also believe that risk-based pricing should be there to address the climate risks. And we have done something for that as well, because in the property insurance, we have already incorporated risk-based pricing in some of the risks. Likewise, transparency and disclosure is also equally important. So such things have been included in our directive, which we have already issued. Similarly, climate risks has substantial impact in capital and solvency as well. So we are also concerned about that issue. So to ensure that the insurers have adequate capital to combat the risks, we have issued the risk-based capital directive. And as a regulator, as Arup sir say, for implementing the climate risks or for combating the climate risks, one-way traffic is through one-way traffic, we cannot combat the risks. So both the insurers and regulators should be equally proactive in order to combat the risks. And the insurers should also do the adequate research and development and the development of the new products. And at the same time, as a regulator, we should also facilitate them to develop the product. And I think we should adopt some sorts of sandbox models in order to encourage them to more research and development and more innovative products in order to combat the climate risks of climate. Thank you, sir.
Thank you very much. I'm delighted to know about the steps and initiatives which the Nepal Insurance Authority has already taken. Of course, this is a new area. The risk is continuously evolving, but as Manuela mentioned in her presentation in the first session, you are looking at risk management, you're looking at disclosures. These are all the ABCs, what we would say, in terms of recognizing climate risk. And of course, you have to follow through on the steps which you have already taken. But let me take the conversation forward. When you look at regulators, of course, regulators alone cannot have limitations. They have to work closely with policymakers or the governments in that sense, in terms of ensuring that the right ecosystem is in place. When I talk of ecosystem, that means there has to be a policy direction or drive from the government in terms of pursuing certain risk-informed decision, risk-informed investments, enforcement of building codes, and things like that. And so that is one part. The other is, of course, also in terms of managing the contingent liabilities of the government also, because whenever a disaster happens, the government has to reallocate their budgets from very, very important development expenditures towards building back better, or in terms of providing relief and recovery related expenses. So let me pass the next question to Udaya in terms of understanding. So you heard from Poojan about what is the role of what role the regulator is playing. What role is the government of Nepal playing in this area? And I'm aware of the National Disaster Risk Management Authority also, which is there in Nepal. So what is their role in terms of putting an enabling environment in place so that insurance can flourish? Flourish in the sense, I'm not saying all risks are insurable, at least the insurable risks can be insured. So that is A. And also in terms of understanding, enhancing the understanding of the bankers and the lenders, because ultimately it is the investments which they make which need to be insured. So if you could elaborate on that, please. Thank you.
Thank you, Arup, and thank you, sir, for the nice presentation. And before I start, I just wanted to make with the one note that if we are assured not to fall, then growth is inevitable, and insurance is the backbone for the development. So if there is an assurance that we provide, then the development would be there, and then we will not be at the back positions due to any climate change impacts. So with the starts, before I answer the questions, what I have seen being a consultant in the insurance industry, the total, if you see in the figures, the total exposure that the insurance industry has been taking till now is around $65 billion. So this is the statistics based on the last year's total exposure for the industry. And for that, the premium that we have collected is around $255 million. So this is the market size that we have been working. And out of that, most of the property exposures that we have been insured is for the more than 50% goes for the property and engineering. So looking on the protection gap, we can think from these figures and start building our market to go further. And while answering to what Arup said, the government, I have been working closely with the multilateral agencies over here, and we worked, the government of Nepal has prepared a disaster risk financing strategy, which enlists around 17 key points and addresses, out of 17, most of the points are related with the insurance, and insurance has been taken as a backbone for the risk financing strategy. So the government's initiative, if we look out from that perspective, they are keen to work on that. And also based on the financing strategy, there is an action plan, and on the action plan also, for the next 5 years, most of the components which has been addressed by the government of Nepal is on the insurance sectors. So the promoting, they wanted to promote the insurance because the government cannot finance all the disasters, and because they don't have the money to finance every time, and we cannot, the government cannot bear the same level of stress that they had done during the earthquake 2015, and the ultimate solution is the insurance, and the insurance can come up, after the insurance protection is there, then the government can come up with the access layers where the protection gap is there. So the strategy clearly defines that the first layer of protection should be the insurance, and above that layer, the government will provide the additional support. So from the government's perspective, there is a very clear idea. And also, there has been a work which we, with the ADB and other multilateral agencies are working at the ground level, at the municipal level, where the medium and small scale enterprises needs to be protected, which are in the part of the protection gap mostly, as well as on the agriculture sector. And I'll put something more up after, I think if there is a follow-up questions.
Okay, thank you there very much. I am reminded of my classes in chemistry, where we were asked to balance chemical equations in class. So you heard the views of the regulator. You also heard the view of what a policymaker is expected to accomplish. Now, how do we balance that equation in terms, let us hear the views of both the life insurance industry and the non-life insurance industry. But let's start with the non-life industry, and my next question is to Mr. Deep Pandey. In terms of how is the insurance industry in Nepal preparing itself to manage this climate risks, which is also looming in the horizon? And what are those specific actions industry is taking or insurance companies are taking to reduce the protection gap?
Thank you, Arup. Actually, I think it's clear. Switch it on. Yeah, thank you, Arup. Basically, the insurance industry, as you must have seen the statistics also, our penetration on non-life sector is very low. Primarily because of the economic situation also, probably people don't have as Mr. Chandrasekhar also pointed out, people are more concerned about today's bread and butter, bread rather than, tomorrow's security. So that's where the hurdle is for our penetration part. But having said that, yes, after the earthquake, the outlook towards insurance has changed, because the insurance industry, thanks to the regulator, they were proactive. They went and they managed the claim, in time, and then the market grew. With that, we have seen a lot of insurance companies that have come into the market. Just before this financial year, there were 20. Now we've come to 14. The preparedness is because now. One more highlight that I would like to bring is the agriculture subsidy that has come. Because people don't have the buying capacity. This has helped, in a way, the insurance industry was forced to go for agriculture insurance because we didn't have the capacity to write. Reinsurers were not interested to, provide support. So we were, in a way, forced to do that. Thanks to the new 2 reinsurance company that got introduced in the market. With that, I think we have now the capacity, because if you're asking frankly, we don't have any support from the international market. We only have support from the local market, and we are moving with that only. And with the introduction of agriculture insurance, what has happened is there have been losses, and once the losses are being paid, the confidence on the insurance industry has grown. So people are finding ways as to mitigate their risk in other areas also, building, their business, small dwellings, personal accident, health. So that is how the market is growing. As far as preparedness is concerned, sometimes we have to be forced. Our market definitely has been forced by the regulator, but we are moving now. In the sense, as Madam rightly pointed out, the climate risk guideline has been introduced. So all of us have understood that, and we've started working on that. The capital has been increased. Because of that, our capacity has increased. We are strong enough now. We don't worry now that even if major loss happens, we'll be able to pay. So that gives us that confidence. The reinsurance companies have backed us sufficiently now. So we have our capacity within it. And more than that, the international agencies have come up with different technologies to manage the risk. So we have seen a lot of new products, including parametrics covers and bundled products also, because parametrics cover might not suffice the requirement fully. So like in certain areas where drought is an issue, there will be issues of where we develop product for drought, parametric cover, but there are risks associated with hailstorms or other diseases. So we bundle that up and issue products. So in a way, preparedness, by way of preparedness, capital, reinsurance setup, that has helped us. And I think we are prepared to face any challenge now.
Okay, happy to hear the progress which is taking place in the Nepalese insurance sector. And when I see the relationship with the regulator and the industry, what I hear is like a mother and a child. So the mother is trying to enforce discipline so that the child grows up and becomes self-reliant in this today's world. We call it sustainable, that they can fend for themselves. And there is nothing wrong in doing so. And so you are moving towards that. You have matured as insurance companies. You have gathered the experience. It gives you the confidence to look at risks. And when I talk of looking at risk also in terms of underwriting risk, introducing new products, experimenting also, when you talk of innovation and all, because you cannot be in a, what you call, in a safety closet in that sense. You have to also experiment what they talk in the tech industry. You have to fail, but fail fast and again get up. So pilots, innovations do help in that sense. But let me move to the hear from the life insurance sector also. When I hear of 92% basically people of the population uninsured in Asia, and Nepal is also would be having similar statistics. So in one sense, they are all self-insured. When we say they are not insured, means they are all self-insured. And therefore, there is an opportunity. And the life insurance penetration, as we see, is generally higher in countries compared to the non-life because it provides an opportunity to save also for a large section of population. And Asia at one time was poor, so they did not have the incomes, so they did not have the ability to save. Of course, Asia still is poor, but the income levels are rising. They have a disposable income from which they can save a certain portion. Now, when you save, basically the saving is because of precautionary savings for the rainy days. The woman keeps a handful of rice away in a pot, which is again risk management. We may not recognize that as such, but she's the risk manager at home. But today you are trying to monetize everything, which is nice. So in terms of meeting the requirements of the rainy days, how is life insurance industry preparing itself in the Nepalese perspective?
Thank you, Mr. Chatterjee, for the question. Thanks, Mr. Chandrasekharan, for the nice presentation. And I don't want to miss this opportunity to thank especially Nepal Insurance Authority and definitely IAIS, ADB, and AII for organizing this event. Really great event. It's really at the right time, resilience you are talking about. So thank you so much for that, and congratulations. So while talking about the, preparedness, about the, it's at this point of time like climate risk, definitely. So certain preparation has been started, from regulators' perspective, the guidelines have been issued, and then after the insurer have been asked to monitor the, climate changes risk, and then after preparing the certain policy of every companies that need to be prepared. Then after, after tracking all those things, definitely it will be impacting the pricing later on, right? So all those things should be included in the pricing, and as a whole, it's very important. You are talking about the, preparedness, but at the same time, I would like to talk a little bit about the opportunities also here, right? So most of the time, as soon as we'll be talking about the, like climate change risk, we'll be more exploring around the risk only, right? It's aid to explore much in the opportunities, I think, right? So these opportunities, like how insurance companies in Nepal can be prepared to, like grab these opportunities, also equally important, right? So if we see it's very simple, right? It's called like risk is the foundation of the insurance, that's for sure. We don't have to reiterate for that. But at the same time, for taking the opportunities, there are plenty of opportunities out there, and all industries should be getting ready to take this opportunity. For example, we can talk about its risk. Climate change risk is always dynamic. So this dynamism is challenging the human being to be more dynamic, right? It's previously, like, we used to be dependent on the, like very traditional convention products and all these things. Now is the time, as soon as the climate change risk is growing, it is being dynamic. Now the insurance companies in Nepal also, it is very important to be dynamic, to bring the changes, innovation, right? So that the risk overall, whatever is being increased, can be covered in a very nice way to the customers. Customers will be put in the center of everything. So while taking the risk, for example, we can talk about the climate changes are bringing, like a lot of, like medical problems. If you talk about dengues are growing like anything, right? So if you talk about, like heat waves is affecting the Tarai region, you never know, like tomorrow heat waves will be coming in the mountain area also. You never know, like it is coming up. But what are the things we can bring, like to address those needs of the customer is very important. That's what, like at this point of time, the insurance industry as a whole is talking about and requesting to the regulators even to go for the more innovative product, so that, like all those kind of risks will be, like addressed. And definitely there need to be a great partnership between the regulators as well as, like the industry, and no doubt the reinsurance companies also, right? So those way, certain preparation are being done, and the thing is, now is the time to explore further opportunity and need to address a lot. That's what I think. Thank you.
Thank you. So we have raised the expectation. There are a lot of opportunities, and insurance sector can provide some of the solutions to manage their risk. But as we all know, insurance, one of the basics of insurance is pooling of risk and diversifying the risk. Diversifying the risk across geography, diversifying the risk across portfolio, and diversifying the risk across time. And for doing that in the most optimal manner, we need the support of the reinsurers, who will provide the capacity to the insurance companies and the insurance companies to basically live on the promise. And who better to respond to that than Mr. Chandrasekaran himself? I personally learned a lot of my reinsurance from him, more as from a practitioner's point of view. So, Mr. Chandrasekaran, the next question is to you in terms of how is the reinsurance industry in Nepal preparing to support some of these innovations to reduce the climate protection gap?
Thanks, Arup. See, first of all, the reinsurance companies in Nepal, the first job is to make sure that the basic reinsurance protection is given to the insurance and both life and non-life insurance companies, so that they are resilient. The point is, if we reimburse the money that they pay to the customer, they get the money to continue to be doing insurance, that is called sustain their business. But when you come to climate risk and when you come to the sudden losses that come, both insurers and reinsurers will have to be together there. For example, if an insurance company wants to buy a catastrophe XL protection, for their book. They will come to me and I will have to take the data. I will have to see how they are exposed and which areas they are exposed and what sort of events have happened in that particular place. And then whether they are also retaining according to their capital, according to their confidence, retaining with them, and then start providing the top-up covers to them. The one thing which I noticed, and I think which will come slowly, is the data-based approach, meaning insurance companies and life insurance companies, you will have to collect the data of what they are insuring, where they are insuring, and then start applying basic models to see whether those areas losses have happened and what sort of a reinsurance covers are to be protected. Of course, I can talk from my company point of view. We are here to innovate. We are here to provide such cover. And we also will seek our protection from international reinsurers. But we will work together to provide the needed cover. But I would again insist that we need to work, both life and non-life insurance companies and reinsurance companies, with the help of regulator, start collecting a fundamental risk location and risk category data right from the time of issue of policy. And if that comes, then most of the job is done. Then you only run it through a model, start buying, and slowly impose building codes or some construction codes. I think they have already retrofitting regulations for earthquake type of risk here. They not allow them to build in the river banks or on the slopes of the hill. So we need to bring all those things. But having said that, in a terrain like this, the sudden, as somebody was saying in the morning, the gradual and sudden, both the cumulative effect of gradual and sudden is what that is affecting the industry here. Gradual, some seepage, some land slippages will be there. And suddenly some water will flow and suddenly we'll lose loss. So both gradual and sudden are applying here. We need to work right from the fundamental level of understanding our risk and where they are. I'm sure we will all be able to find a solution. It's a very fundamental solution, can be done, and we can take it forward.
Thank you, Mr. Chandrasekharan. What I gather from you is we need risk accumulation data, which nobody else other than the insurers should be able to provide. And of course, in addition to the data, the partnership approach is needed because what we call is you can co-create products, co-create solutions. And of course, the regulator can then play a role in case you are having some issues in terms of the regulatory environment or the legal environment. And perhaps that is the way forward. I think we also heard about sandbox regulations or sandbox to be put in place. Again, where all these ideas can be curated before they are actually scaled up for the benefit of the wider population. I'm conscious of the time also. We have about 15 minutes more. I can request, if there is any pressing question from the audience, I can get 2 questions now. Yes, Meena.
I just want to digress from the entire discussion. We have the international agency, the policy makers, the regulators, and reinsurer and the insurers. I want to look from the prevention perspective rather than mitigating and managing the risk. So in the entire presentation and the discussions, there was no mention of prevention. What I mean by prevention is that we have this short-term use of the products that we buy. We have too many products than necessary, and we, by virtue of that, increase the demand for various products and services, and increased production. Of course, all countries are now running around increasing their GDPs to show the figures that they are in the growth path. That's the parameter that every country has. But why is that these agencies, international agencies, are not recommending to move towards health, happiness index or well-being index or similar approaches so that we can sustain our country and the environment with less effort and less stress on the natural resources? This is one thought which I was looking at. And from the insurance perspective, I was looking at when the recommendations are being made, why is it not when the underwriting is done? What are all the controls to reduce the burden on the this system, to reduce the climate risk? Maybe that's something which we need to explore. I'll stop with the comment. We all might have read a WhatsApp circulation on a person going on a bicycle, which is he's a threat to the economic development because he doesn't use the petrol, he doesn't use cars or cycles, or he will not get into spare parts. So to that extent, the production is less, and he'll not go to health system because they're the. So where are we exactly? Why is that our direction is not to prevent rather than manage?
Very fair point made. Any other comment, question? Okay, please. Please be concise, because we...
Yeah, I just make the quick one. This would refer to Mr. Murthy's presentation regarding the graph of the trends of the temperature. And from my practical experience, when this is going to be into the risk assessment in the climate regimes, this graph has to be downscaled into the micro level, perhaps at the farm level or at the city level, so that the predictions can be very accurate and close to the reality. So I'm saying this is that we need to see that important, because we cannot take this temperature, global temperature, national as for granted. So when we have to deal with the risk assessment, the scientists actually go down into the micro scale and to see what is the differences of the temperatures that might affect the growth of the apple. Thank you.
Thank you very much. And one last question, I think.
Good afternoon to all. I'm Kapil Kumar Dal from Himalayan Life Insurance. And my question is regarding ORSA point of view. In business model, I have three questions, and I'm combining three questions.
One question only,
okay.
Please.
While preparing business model, what factors we should consider from the point of view of climate change? I mean, while preparing business models, how climate change risks we should include in our business model? That is my question. Thank you.
Okay, thank you very much. Meena's question is about why no discussion on risk reduction measures. Meena, actually insurance is there to only look after the residual risk. So we are presuming rest of the risk is being managed. But let us hear from our experts in that sense. On the second question from the Asian Institute of Technology, I am aware that having worked in Nepal, granular data at the municipal level is available of the micro agroclimatic zones. They are available in the country, so that should not be a worry, but let us still hear from the experts here. And the third one, in terms of the model, well, there cannot be one model. You have to rely on several models, because otherwise you are opening yourself to modeling risks. But again, we have the life insurance expert here. So let me start with Udaya, maybe on the climate zone part, which was posed by AIT. Yeah.
If you look on the, there are two sects that we need to see. One is looking on the earthquake angle, and which normally we don't see as a climate change risk. And we are in the zone 4 and zone 5 over here. And if we see from the climate change risks perspective, a few things that we need to consider while doing a development or while having an infrastructure developed is that During the construction phase, we have the cash flow which maintains the risk transfer mechanisms, whereas after the development or after the construction is over, we don't see that such infrastructures are well insured or the risk is transferred because there is the scarcity of the cash flow. So one of the things that we need to think about on the development parameters is that while designing our whole infrastructure developments, there is an element of risk transfer, not only during the construction phase, but through the life of that infrastructure, so that it gets maintained during its life. So in any climate change perspectives, if you see the flood, landslide, or anything, then it is protected. The next point that I would like to make is that, especially in the small and medium scale enterprises, they are not models, and we don't know what exposures they have, and even the insured also doesn't know how much they are exposed. So we need to educate the small and medium scale enterprises that they are exposed to certain type of risks, and we can have a thumb rule so that they understand that how to evaluate their risks, their exposures, and while doing the insurance with the companies, there is not any under insurance. So the impact due to any floods, landslide, will not make them fall down. As I made in the very first statement that if there is an assurance not to fall down, then we can always grow. So any small and medium enterprises, they will not fall down. So that needs to be taken care, and then that will be a part of the whole industry to take care. And on the modeling sides, we have some of these studies.
Wait for the modeling. Just for that question, let me go to
risk reduction. I wanted to say something.
Yeah, I will come to Mr. Pandey in terms of how do you factor in risk reduction in your underwriting and pricing decisions. This is the first question which Meena raised here.
Actually, most of the products here, we are in the tariff regime. So because of that, I mean, we have to follow the tariff. We cannot go that higher also. And the problem is that since the penetration is low, I mean, our requirement is to gain confidence. So we follow that tariff and then sell the products. I mean, we cannot, as Madam pointed out, I mean, prevention could be definitely a right model, right way to move ahead. But having said that, I mean, it's a developing market. People are learning and doing things. So especially in the commercial sectors, yes, we do go for proper underwriting, and then we do ask for prevention measures and all. But for the products that we are developing, especially in the rural areas, the index-based products or the agriculture products, we follow the tariff, and then we are slowly learning as to what could be the preventive measures. Because as I said earlier, probably in a way we were forced to do agriculture insurance. So we are not, I mean, it's only been 9 to 10 years now. It's been 10 years and we were learning that. I think the future will be definitely prevention. But as of now, I mean, it's basically we are trying to gain confidence from the market so that they get to understand the importance of insurance, and then we move ahead in the coming days.
Okay, thank you very much. And as a prudent reinsurer, Mr. Chandrasekharan, how are you looking at risk reduction, and how are you rewarding companies in that sense through a differential premium?
See, I would first, before risk reduction, I would like to go one step below, that is risk measurement, and find out where I am. That's what the point I made a little while ago. But when it comes to risk reduction from a non-life perspective or reinsurance perspective, we always look at the two if there is a big loss, we need the insured also to bear the deductible. So that's one. If you keep a deductible in such a level, then the fellow will start taking this much loss is going to fall on me, and therefore he will take care and start preventive measures. The second one is the pricing of the product will have to be related to the deductible. See, if somebody is willing to take a high deductible and confident of maintaining his risk and things like that, we should be able to give him some sort of a discount. See, this is one point which, so from our perspective, we would like to encourage the insurers to develop products which will have an element of the insured taking preventive or risk reduction or risk control steps, and in turn gets the price benefit out of it. And you do the price benefit analysis. If I do this much, my premium is coming down. The cost of introducing risk reduction methods, measures are this much. You will do a cost benefit analysis and do that. Therefore, as a reinsurer, I would try to impose upon the insurance companies to develop products, and I would request the regulator to look at, let the insured become more aware, let the insured become more, yes, my property is more important than my claiming insurance from the insurance policy. So, by retaining the property, I'll get more benefit than by just simply passing on the risk to the insurer. So fundamentally, this attitude will have to be brought in, and we would support, give support to the insurers if they are having such products.
Okay, thank you. So basically, the insured has to have skin in the game, basically, and which is a fair thing to consider. But let us also address the last question on the model, which was specific to life insurance, I believe. Or was it? Yeah, that's what I heard. So, could you, Mr. Nirmal, can you please elucidate what is your take on this?
Thank you, Mr. Chatterjee. It's basically, as you also mentioned already, like there is no particular model to be there, right, for this. It depends on the, what sort of risk exposure is there with the company, right? What sort of portfolio they are maintaining, right? And what is the risk appetite is there, right? On that basis, various companies will have their own, analysis. And on that basis only, this risk will be further analyzed, right? The model will be prepared. If we talk about the, we are taking certain advantage as a MetLife, right? We are trying to, gather the certain modality of different countries and what will be appropriate for Nepal. We are looking into it. But as he rightly asked the question, in this time, right, what the modality we can go. So there might be experience sharing among the industry, right? The association can work on it with the regulators very closely. Then what sort of modality will be the, best fit for, commonly in this industry is yet to be looked into, and we can explore further on that, I believe.
Thank you. Uday, you wanted to say something on modeling, but within 1 minute, I will have to conclude.
On the modeling sides, rather than on the life part, I was trying to explain on the non-life sides, especially as you had raised the questions on the data. It's not that we don't have the data. We do have the data related to the climate change risks, which is like the flood, landslide, and all those. And we do have all those basic statistics. The gap that I have been observing since last 10 years is that how to connect that data to our insured portfolio or the exposures. So that's the gap that we have been looking on. And then that needs to be addressed. If we could address, the granularity of the data could be different, but at least from the positions that we are right now, if we start looking from that, then obviously the granularity can be, we can go on to the deeper level of the data points. Thank you.
I think what boils down from this Q&A, based on the questions we received from the audience, is you need data. Once you have data, you can measure the risk, you can forecast risk, and also take appropriate decisions, whether it is for risk reduction, or whether it is for risk sharing, or whether it is for risk transfer. But this is a partnership where data needs to be shared, experience needs to be shared, based on information, again, very much quantitative in nature. I would like to conclude on that point that there is a lot of opportunity, but the new risks are emerging. Existing models may not suffice. They might be short-term in nature. So models also need to evolve over a period of time. The insurance solutions, reinsurance solutions will also evolve, keeping in mind the needs of the population also, because the risks are also changing. So this is something where we have to collectively keep our finger on the pulse, as they say, as we navigate this journey and learn together. With those words, let me thank all the panelists for contributing to this very enriching discussion. And thank you, everybody from the audience, for patiently listening to us. And of course, we have still time during the networking break, during lunch, to carry this discussion forward. Thank you very much.
Thank you very much, ladies and gentlemen. A big, big round of applause for this fabulous panel for bringing out definitely the best when it comes to capturing the climate change opportunity. May I please invite on stage Mr. Surya Prasad Silwal, Chairman of Nepal Insurance Authority, to present our panelists and our presenter with a token of appreciation. We'd like to thank our presenter, Mr. Chandra Shekaran Ramamurthy, Chief Executive Officer of Himalayan Reinsurance Company Limited, for that wonderful presentation on how climate change can be tapped into as an opportunity and how threats should be converted into opportunities. We'd also like to thank Mr. Uday Raj Adhikari, Director, Pivot Risk Limited, to kindly come forward and accept this token of appreciation. We'd also like to thank Mr. Deeprakash Pandey, CEO, Shikhar Insurance Company Limited, to kindly join us for accepting this token of appreciation and our gratitude for being a part of this panel. We'd also like to thank Mr. Nirmal Kaji Shrestha, Vice President and General Manager of MetLife. Also Ms. Poojan Dungel, Director, Nepal Insurance Authority. Thank you, ma'am, for bringing out some crucial points related in the insurance industry in Nepal as well when it comes to capturing the climate change opportunity. Our moderator already received his token of appreciation in the previous panel, so we'd just like to thank him for fabulously moderating this session. Maybe a big round of applause for our moderator, our panelists, and our presenter, and a group photograph as we end this session.
Namaste, good afternoon. So it's my great pleasure that's given me opportunity to talk about the earthquake. So I like to thank to Nepal Insurance Authority, the chairman and the team, ADB, IS, and 82. So guys, it's a very difficult task for me. I think after the lunch, the people are in the sleeping mood. So I think you should be very active and be alert, because my topic is earthquake. So before going in that, I just wanted to share my experience about the earthquake. So it was a Saturday, a very pleasant day, and that is in Nepal, Friday is the half day. In the evening, we are going to enjoy our Friday evening, and the Saturday is the off. So what I did, I went to cycling in the morning with my friends and came back to home. And we have a good lunch with my family. So sometimes, you know, we insurance people all the time busy in their work and go home very lately. So I try to manage the time with my family. So I just make the planning that we will go somewhere in the afternoon. We are making the plan. So I think I forgot it's maybe the movie shopping or the dinner. So all of a sudden, I heard the noise, the vibration. It's like the aeroplane is just on top of the roof or the big noise of the vehicle. So I couldn't grasp what is going outside. So by the way, it's instinct in my mind. So I took my family out and standing in the support of the pole in the garden. So it was the earthquake. So I think everything was silent, only earth was shaking. So this is the earthquake. So I don't think that I have to elaborate that what is earthquake, because I just share my small this thing. So a natural process of the tectonic plate closing, sometimes volcanic eruption and other geographical activities can be the create earthquake. So I have the limited time, I will fast going on that. So many parts of the Asia and the Pacific, the high risk of the earthquake due to the several tectonic plate boundaries in the region, as well the Pacific region for the fire and assured substantial fault. So if you talk about our neighboring country or Nepal, so we are in the very prompt zone. So we took some of the historical data. So Japan, earthquake vulnerable in the Asia, Japan 1992, it was 7.9 Richter. China 1927, it was 9.7 Richter. Nepal 1934, it was 4.844 Richter. China 1996, 7.5 Richter. Indonesia 2005, 9 Richter. Japan 2011, 9 Richter. And again Nepal, after the 80 years of thing, this 2015, it was 7.6 Richter. So I've been talking about the Turkey. We have recently heard about the Turkey earthquake also. So these are the photographs of Indonesia earthquake 2015, Kashmir earthquake 2005, Japan earthquake including tsunami. So sometimes people are a little bit confusion about the earthquake and the tsunami. So we are the landlocked country, the mountains country, so we don't have the tsunami. Those who are in the sea area, that's a kind of tsunami under the below level of the sea. So that is a kind of earthquake where they cover the tsunami risks. So if you see this plate, the red one, so the red plate, just below of the red plate, where Nepal is there. So it shows that we are sitting on the volcanic. So coming to the point, prospect of the Nepalese earthquake, 2015, the number of people killed near about approximately 9,000 and number of people injured, 16,800. The number of people displaced 2.8 million, number of the people affected 5.6 million, number of the people need to food assistance more than 1 million, number of the hospital damaged 26, number of the houses destroyed near about 0.5 million at that time. So Nepal claims synonyms. So industry-wise, the claim risk is like this. Hydropower project, the 5%. Residential building, service sector, it is 48%. It was 48%. Traders, importers, 9%. Mall building, 4%. Manufacture, 3%. Multi-story complex, 26%. The cancellation of claim number was 4%. So if you go through the claim range of the insurance estimated, so 0 to 10 million is 37%, above 10 to 20 million was 22%, above 20 million to 30 million is 11%, above 30 million to 40 million is the range 5%, above 40 million is 22%, and cancellation claim is 4%. The cancellation claim because of the deduction of the access policy in our fire policy at that time. So one good thing is that we would like to thank our regulatory bodies. They have made the far side of this thing. Previously, it was fire only. So before the earthquake, our regulatory body has decided that we have to incorporate the earthquake risks in the policy because Nepal is the earthquake zone. So because of that reason, the claim was fall under the earthquake perils. So this is the disaster escape in the Asia Pacific. So low density, high frequency, the percentage is very high. Medium intensity, medium frequency, that is 18.42%. 4.21% is high intensity, low frequency. 0.98%, very high intensity, very low frequency. So risk financing option. So we have categorized this disaster risks. High risk layer, that is flood, earthquake, typical cyclone, medium risk, medium flood, medium earthquake, low risk, logical flood, and the landslide. So financial instrument, that is one is, as you know, this insurance is one of the financial tools to assess the risks. Another thing is reinsurance, catastrophe reinsurance, the contingent credit, contingent budget reserve, annual budget, and allocation. These are not used in the Nepalese market. If there is required, we have to look forward from our panels. They will talk about in this matter also. So when there was the claim in 2015, so most of the Asian region are taking that how Nepal is going to settle all this claim. So at the time, from the regulatory body NIA and the Nepal Insurance Association and all the companies, surveyor, reinsurance company has taken a very vital role to settle the claim. So at that time, there is so many acts and so many thing was there as per the land of the law and the act of the Nepal Insurance Authority. So we have made some relaxation of the documentation. Documentation was asked for the insured only. Because it's the earthquake, so we don't need too much document like police report and all the materials report. Everybody knows that earthquake occurred. So we just make the hassle-free claim settlement at that time. And we changed the perception to settlement of the claim. And it was, though it is the very tragic and the panic or scared matter, the earthquake, but it was an opportunity to give settlement to the clients. So after that, the penetration of insurance is being increased nowadays. So at that time, the international reinsurance company is also very flexible. They just ask to all the companies what is the estimated losses, and without sending the cash call, they have sent the advance money to Nepalese insurance industry, and we have given advance to our clients, and it is very much comfort to our clients at the time of the insurance. So not only that, so at the time of the earthquake, so we have some acts when there is the big claim, the insurance companies take the permission for the surveyor to appoint in the Nepalese market. But NIA has web out that thing. So every insurance company, what they have, were deported to the international survey, they came very easily. Not only that, the size of claim number was very big, so limited survey was there. So we took the help of the student of engineering college, though they don't know about the policy, insurance policy terms and condition. But we send our people with them. And the student of the engineering college, they just go and measure the house and the house where the crack and the destroyer was there. So they just estimate the loss of the content of the building and all. So our people is fixed that the policy and terms conditions, how much they are entitled to get the claim. That is one of the reason. And very easily we have handled the claim at that time. So after that, the penetration of earthquake is, our market is increasing. Insurance is considered as major tools for the resilience after CAT event by the government. So this is some of the point, this insurance market, pre-earthquake and post-earthquake. So as you know, I think most of the company, even is the developed country, this insurance is nobody like, because it's not a stuff that you can taste or you can feel or you can see. It's only the paper is there, the commitment is there on the paper. So it's very difficult to sell this product anywhere in the world. So it has to be mandated from the government in the Nepal. So most of the insurance is taking place because of the bank loan, or the loan is there involved. So we sell our policy through the bank. The estimated losses was US dollars 7.1 billion in the property side. And the insurance coverage was less than 1% fall in the insurance penetration. So at that time, the insurance penetration was only 1.41%. Property insurance was perceived more of the liability than protection, is the mindset of most of the clients. Insurance companies in Nepal has never faced a major cat event like 2015. So at that time, our penetration or the total business size was 11.43, 2015 and 16. So after post-earthquake, so next coming month, we are going to close our fiscal year, 2022 or 23. So approximately the turnover of the total market in the non-life insurance company may be 14 billion Nepali rupees. So at that time, earthquake, we have paid 16 billion Nepalese rupees in the market. The total claim was near about 17,000. So one good thing is that there is no any controversy. So only there is 10 to 15 dispute at that time of claim. So we have settled in presence of the Nepal Insurance Authority. So within a year, we have settled all the claim. That's the major, what we can say, that we have given the good service to our clients. Awareness campaign taken under the government initiative, Nepal Insurance Authority, collaboration with the Nepal Insurance Association and the province level. So it helps to increase the market penetration 3.67%. The property insurance backup in the insurance company settled 16 billion earthquake claim. Now, one good thing is that not a single insurance company went to insolvency or the bankrupt post-earthquake 2015. It's because of the good regulation and good backup from the insurance company. Because of this reason, we are still alive. So we people are very lucky that we are working in the insurance industry. Because of the so many disasters we have faced, so many pandemics we have faced, but still we are in the hall. Why? Because we insurance people take the money from the people for the people. So it's like a corporate social responsibility where we are working without paying paying from your pocket. So it's the good thing that we are working in the insurance industry. So dilemma of the earthquake in the Nepalese context, maybe it is all over in the Asia, the same thinking is that. But in the concept of the Nepalese industry, they think the earthquake will come after the 80 years. So why should we waste our money to the insurance policies? So maybe if it is not in the 80 years, will come, maybe the 60th year. Why should we pay before that? So that is the mindset of the people. So we have to make aware and we have to break through this mindset of the Nepalese or the Asian people. The design of the purchase earthquake insurance has individual component and the social components. Since insurance is subject to contract law, not political will. From the individual household perspective, privately secured capital is the better because of you get money faster to rebuild after earthquake. So those who are insured, they are recovered very fast at that time in the Nepalese economic recovery. So while I'm talking about the Nepalese context, about the earthquake, so previously we have also same like that. We have a fire, then add and cover is fire and shock, fire, earthquake and shock. Now we have a composite this thing. So now we have changed every natural paralysis covered under the property insurance. Maybe it's different Asia region, they have their own system. The paralysis, the definition is same, but the policy terms and conditions different. Like in India, they have categorized in the 4 journal, first, second, third, and fourth, where there is more vulnerability, they charge more premium. So there is some system of like reinsurance and pooling mechanism in there. Government assistance and the government guarantees there. Some countries issued cat bond and the earthquake-related risks. Earthquake vulnerability in the South Asia. So catastrophe in the nature. Most cities are suspected in the earthquake risks. Household in the South Asia are comparatively traditional type of the settlement, less earthquake, resistance building structure. After the earthquake, we have the building code we are implementing in the very proper way. Nowadays in Nepal. Coastal area are the more prone in the tsunami introduced by the earthquake. Infrastructure like road, railway, airport, transmission line, more vulnerable to the earthquake risks. Industrial risks, SME go down are more prompt to the higher risks of the earthquake. Even highly developed countries has made earthquake resilience through the risks are unavoidable from the tsunami, form of the tsunami. So financial protection, again the earthquake risks. So this is the government perspective and the private sector perspective. Government think the measure government used to form the basket fund and the relief measure to the earthquake victim. Relatively less developed country rely heavily on the foreign and interest-free loan to rebuild the restoration of the earthquake damaged area. So I think this foreign aid and the depending on the subsidy on the government, this thing is not good for the government as well as the local people, because there are some limitation to give the subsidy for the people when something happened in the disaster time. So private sector loan and aware customer available insurance product for their earthquake risk management. Individual and the non-farmer sector has suitable allied insurance product. Some large risks has made pooling arrangement in the financing in the event of earthquake damage. So how to financially prepare an earthquake? So I think we have a panelist from the parametric insurance and the CAT modeling this thing. So we have a traditional policies already there, so which cover all the natural calamities and Nepalese contests. So this parametric insurance is a little bit different. I think they will more elaborate on that. So it's depend only that they don't need any physical material damage. They set this parameter, this thing, so what is the rector? So if you fix them, so the satellite, from the satellite, they think does it happen, this 5 or 6, 7, 8, whatever they charge or whatever clients desire, no? So they will set this thing. If something happen, no need of the survey, no need of the material damage, they just pay the claim. So I think they will elaborate on this thing because it's the new thing for me also. So resilience defined as the ability of prepare for the plan for the observed, recover from the successful adapt to as best event. So I will little bit fast because the time I don't know to permit more. So there is one saying from the California earthquake. So this developed country where people are educated, they know about the insurance. Even though they said federal and the state fund alone are likely to be enough to get your life back to its pre-disaster condition. So my humble request to all, make aware your people, make aware your clients that be insured and be secured. Without this thing, you can't think further in the future. So these are the CAT modeling. So I think this, we have a panel, the Moody, the Alok is there. He will talk about this more. So I think I have to conclude my slide. I think you have little bit share my experience, how we face, Nepalese people are faced in the earthquake time. It's very tragic, which can't express in my words. Thank you very much.
Thank you very much to Mr. Chunky Chetri, the CEO of Sagarmatha Lumbini Insurance Limited and President of Nepal Insurance Association. I request her to kindly take your seat on the stage. And may I please now invite our moderator for this panel discussion, Mr. Abhijit Chattoraj, Dean, Birla Institute of Management and Technology, to kindly join us on stage. Can we please have a big round of applause for our moderator who will be moderating this session. I'd also like to invite our panelists on stage, Ms. Neha Yadav, Business Development Officer, Business Development Director, my apologies, at Discourage Underwriting. Mr. Alok Kumar, Managing Director, Head Global Analytics Services. Could we also please invite with a big round of applause, Mr. Damodar Bhandari from Nepal Reinsurance Company Limited. Earthquake insurance experience from Asia is the theme that our panelists will be further dwelling upon. And now, without any further delay, may I please request our moderator to kindly take over.
Very good afternoon, ladies and gentlemen. At the outset, my sincere thanks to Nepal Insurance Authority for extending the invitation to be part of this fabulous seminar, which is co-partnered by IIS, ADB, and III, if I pronounce that, AII, I'm sorry. So before I run through this session, I want to set the context. What exactly are you going to discuss? And that's the reason I will quickly go through my presentation a little bit. I was reading a newspaper report from Turkey, which says 200 respondents were interviewed and 65% of them did not know what kind of earthquake cover they had. That's the level of unawareness that exists in Turkish market. And remember, Turkey is one country which is frequently witnessing earthquake. Now, what exactly we cover? Different jurisdictions cover just earthquake differently. The cover provided in Nepal after 2015 is quite good, quite comprehensive, quite sweeping in the sense. But many jurisdictions, including India, does not cover earthquake that comprehensively as we do it in Nepal. Now, what exactly we cover in the earthquake? There is a question, fire and shock, both are qualifiers. What do we say qualifiers? Means in the policy, when we cover earthquake, per se we do not cover earthquake. What we cover is fire and shock. And they are called qualifier perils. The problem with qualifier perils is that in accepted perils, what happens? The insurance company has to, the onus of proof is with the insurance company. But in qualified perils, the onus of proof lies with the insured. So every time there is a dispute over a claim, the insured has to prove that a particular peril has operated and that particular peril has caused the loss. So the time has come where the regulators in every jurisdiction need to think over seriously that the peril earthquake must be clearly defined. The way we have done in health insurance in India, almost all the perils that we covered, they have been very clearly defined. If I look at the other components of sorry. So we want to understand, when I'm looking at the peril earthquake, do we cover tsunami? Do we cover liquefactions? Do we cover aftershocks? If we cover, say for example, tsunami is covered only when the STFI peril is covered in insurance. So similarly, do we cover liquefactions or aftershocks? These are the things that need to be clarified very clearly. Similarly, do we cover induced seismicity? That's another problem that we need to look at. The earthquake risk assessment per se is earthquake hazard. There are three components: the fragility, the vulnerability of the assets, and the inventory of assets exposed to hazard. The real challenge is the characterization of the earthquake hazard and the determination of the fragilities and the vulnerabilities of the physical and social elements exposed to the hazard. I will quickly go run through these are some of the models that we will be talking. And there are two ways of looking at things. When we go for assessment, do we go for probabilistic or do we go for deterministic? Deterministic is slightly problematic in this sense that it only talks about the present, possibly doesn't throw much light on the future. So that is one area we will be talking. We have an eminent panel member with us, and he will be talking at length. So when I'm looking, what are the missing dots? Future earthquake studies are predominantly focused on the evolution of exposure and vulnerability. In the context of built environment, they really fail to consider the effect of socio-demographic changes, and those changes are really alarming. They also do not consider the important part the community resilience building or planning plays a role. The whole stress is on qualifying earthquake risks in terms of traditional metrics like physical assets, losses, and casualty, a very narrow dimension, as it fails to gauge the consequences of disaster on vulnerable segment. We will look at simulation-based earthquake because that's the need of the hour, and my panel member will talk about it. Similarly, changing measurement dimensions, that's something we'll be talking here. And earthquake pool, the Turkey pool, the most important thing in Turkey pool they talk about is that earthquake insurance coverage at an affordable but actually sound rates for all registered urban dwellings, that's what they look at. They limit the government's financial exposure to natural disaster, build long-term catastrophic reserves to finance future earthquake losses, and encourage risk reduction and mitigation practices in residential constructions. So when we look at building an earthquake pool in Nepal or possibly in India, we have terrorist pool in India, not an earthquake pool, need to look at all these things very carefully. We have a lot of probable solutions. Parametric is one which we'll be talking. And then there has to be a paradigm shift from being reactive to proactive policy responses and apparatus. We cannot afford to be reactive. We have to be very, very proactive. We have to deal right from the beginning. And that's all I tried simply to set the context, and will go back to my panel members, and I start with Mr. Bhandari. Mr. Bhandari, the RSMDT pool that you created here, that worked very well, I understand.
Sorry, sir?
The RSMDT pool that Nepal created, that I understand, that ran very successfully. Do you have any plan to create an earthquake pool in Nepal?
Thank you very much, sir. Actually, after the earthquake 2015, it was the great shock after 1934. In between also we had few earthquakes, but no more impact. And the severity wise, this is the second earthquake where really commercial insurer also badly affected. And as presenter mentioned that about 900 were killed, and 16 billion, more than 16 billion, about 17 billion was the insured loss. And the number of life was about 360 plus. So if we count this amount in current situation, which means the economic exposures may comes threefold more than that because the inflation and all those things. So our regulator also asking us regarding the Nepalese environment, especially I am from reinsurance side. So there is a concern to get the reinsurance support for the market and make a sustainable reinsurance service for the industry. Is really required in 2-3 areas, which is one is really earthquake, and another is also we are talking regarding the aviation and engineering business also. So these are the risks where we need to have some collaboration. And as you correctly mentioned that one of the successful story of the Nepalese market is the obviously RSMDST pool, which was established due to the requirement of the concurrent situation. So I think this is the time has come to establish and to take another step to establish a pool. I think it would be more better to establish a pool in to covering the region and maybe participating to India, Nepal, and these all areas. And because as he mentioned in his presentation that we are in the really vulnerable zone and we are in the red zone areas as well. So I think it could be a private PPP model institution, or it could be more than that also beyond the country boundary. So it would be a successful story. I think government also may ready to invest.
My precise question is piggybacking on your RSMDT experience.
Yeah.
Is anything on the anvil to create a earthquake pool in Nepal, or you're thinking differently?
No, it's like same, maybe about same, because I think there are other international agencies like World Bank also trying to set up some kind of coverage, maybe not only for the earthquake, but for the all catastrophic losses or risks. So there is a discussion and homework that how could we solve the requirement of the nation. There is a question. So it could be, of course, the severity and the impact would be the much higher than that, because the earthquake, when it occurs in Nepal, Kathmandu in 2015, sorry, in Nepal 2015, it was very remote areas. And if, let's say, if it would be in our place, I mean in the urban sector, the losses would be the more higher than this one.
Right. Thank you. I'll get back to you, the kind of preparations you will be making. Analytics play a big role in predicting the future losses, but knowledge about seismic potential gets amended every time there is an earthquake. So inherent uncertainty in predicting the level of ground shake is possibly not precise. So what are your plans as you are from Moody Analytics? What are your preparation? How can you precisely predict both in terms of both the losses in terms of quantum and also in terms of the magnitude? If you could elaborate that, I believe you have a small presentation, so
Yeah, I'll share a couple of slides, but just I want to clarify right at the onset that when we talk about modeling, our effort is not to predict an event, but it's really to estimate the loss potential. It's a really probabilistic estimate of the frequency of the event as well as the loss potential. And I always make sure that we differentiate between prediction versus the estimation, right? So I'll like to take the liberty to share a few slides and highlight how we go about estimating the earthquake risk. So good afternoon, everyone. It's an absolute privilege to be here to share the approach to earthquake risk quantification that my company's Moody's Analytics has developed and has been using across the world for nearly 30 years now. Why probabilistic modeling for perils like earthquake? Earlier today, Mr. Chunky Chetri, when he was talking about the earthquake experiences and mindset in the country, that earthquake happens probably once every 80 years, so maybe take the gamble. And that's the risk the industry faces if it just relies on deterministic estimate or take one or the other data point from a really past, way back in the history to put a value to the earthquake estimate, right? Bring along the reality in Nepal. One of the data point Mr. Chetri shared was that insurance premium in Nepal was roughly about 12 billion Nepalese rupees back in 2015 when the event happened, and it's close to 40 billion today, right? So in the span of 8 or 9 years, the market has grown 3.5 times. And any effort to take the experience from 2005 and just extrapolate that in an expanding market is fraught with danger and danger of completely getting the risk perspective off. So what I would like to share, maybe start with this pictorial view. What you see is map on the left side of Indian subcontinent, Nepal included, and the dots represent various historical events that have taken place in this geography, right? Looks very busy, and if you bring together this picture with the ring of fire that we all know that goes along the Pacific Ocean in terms of the earthquake frequency, this area, this part of the world looks as dense as the ring of fire, right? The frequency of earthquake in this area is quite significant, and the smaller chart on the right-hand side represents all the magnitude 4 and higher earthquake that Nepal and surrounding areas have experienced only in last about 30 years. We are not talking about hundreds of years, it's just last 30 years of data. So what we do in terms of getting a good probabilistic estimate of the risk, earthquake risk, I'd like to walk you through a framework we use. This we use not just for earthquake risk, but for flood, for cyclone, increasingly for climate perils as well. But here I'll restrict myself to the example from earthquake. So one of the first thing we do in terms of doing this probabilistic estimate is we start with the historical catalog of the earthquake of any particular area, and then use the well-researched science around the fault characteristics of the region to simulate almost 10,000 year worth of simulated events, right? So that allows us to capture all the events which is possible, knowing the characteristics of the fault, but which may not have happened so far because our history of capturing is 100 to 200 years, right? So we would take that assigned probability, but look at the fault characteristics to create a very dense, probability-weighted stochastic event set. So that's step one of doing this estimate. Now, earthquake itself translates into the ground motion, and it's the ground motion that really causes the damage at the location of the risk. So from each of these stochastic simulated event database, we use the science behind the propagation of the earthquake waves across different soil type or rock or different geographical characteristics of the region to estimate the shaking intensity. Could be measured by PGA or modified Mercalli scale. So to estimate the shaking intensity at various places where the insured property exists, right? It's the shaking intensity that causes an earthquake. If you're sitting in Nepal and a magnitude 9 earthquake happens in, let's say, Indonesia, shaking intensity that you experience here is almost nothing, and so it should not bother you from the loss perspective. So we get an estimate of the shaking intensity. The third step in the process of building this probabilistic model is to develop the damage function. Now the challenge with perils like earthquake is very limited data available, right? In Nepal, the data was only one data point from 8 years ago, but we don't have comprehensive enough data about the effect of the shaking intensity on the built environment. So we rely on similar other countries which would have similar building characteristics and have experienced earthquakes, and use that data at a global scale and adjust that for the local characteristics of the building to come up with many combinations of the damage functions. This could be for a residential building made up of, for example, wood in some area or concrete or masonry in some other areas. It could be about a commercial office building made up of reinforced concrete or steel frame. So all those characteristics are captured based on, again, the civil engineering judgment backed with the loss estimate for some of these, for these building types. These three components are the key component of any simulation stochastic-based probabilistic model. You apply on that, so that's generally available as a software, but then you apply your own insurance exposure through this model to start to estimate the loss potential. So what are the insurance exposure? It's really the replacement cost of the properties which are being insured. It can be the cost of the structure, it can be cost of content, and in case of commercial industrial facility, it can also be the level of business interruption you are covering. And finally, with the replacement cost, we apply the insurance conditions to come up with loss frequency curve, right? So now that's, you can say this is a theoretical perspective on how CAT modeling is done. So what does that mean for Nepal? So we used our framework to do a very quick estimate of what could this mean for Nepal. Now our challenge in this estimate is we don't have precise exposure data for Nepalese insurance industry. That's something we are working with the insurance market here to see how we can bring our framework along with the actual data. But we did the exercise with a fictitious $1 billion of exposure being placed in 4 different cities across the Asian region to give you a comparative picture on what's the loss potential in Kathmandu area versus some of the other cities. So 2 sets of output from the model. First one is, this is an stochastic annual probability of the earthquake impacting Nepal and roughly 100-kilometer buffer zone around Nepal, right? So with this, you would see that this region is likely to see roughly 1 earthquake of magnitude 6 or higher every 3.5 years. That's the frequency. Whereas an earthquake of magnitude 7 or higher is expected with a frequency of between 25 to 30 years, right? So that's what you're looking at, which is not a picture you will get just purely looking at the 100 years of history. And the last point of the simulation exercise is just as a thought exercise. So we picked up 4 cities across Asia, Kathmandu, Istanbul, Jakarta, and Delhi, and applied exactly same exposure value and ran our probabilistic model to see what kind of loss frequency curve we would get with this estimation approach, right? So what you see on this chart is bottom x-axis is the return period or in a way frequency of the event, and y-axis is a representation of the relative loss potential. And of these 4 cities, you can clearly see that Nepal, Kathmandu, has the highest loss potential compared to Delhi, and a neighboring city. Same amount of exposure would cause roughly 3 times more losses from Kathmandu area than it would be from Delhi area. So that's the power of doing a more stochastic assessment of the risk. One question could be what is required? In the panel before the lunch, there were discussion around the quality of data. One needs, the insurance industry would need to capture in a consistent fashion the location of the property, the insurance conditions, what kind of limits and deductibles are in place at the primary level, construction type of the building, the occupancy type, what's the purpose of the building, and year of construction to be able to do a good comprehensive quantification of the risk, right? We talk about building resilience for insurance industry, and I feel building resilience comes from, at a minimum, starting to do a good assessment of the risk and quantification of the risk, and that requires good quality data. Chart on the right is just a quick demonstration of, as your quality of the data increases, the comfort, the uncertainty of loss estimate reduces, but with poor quality data, you have a much higher uncertainty in the loss estimate. That's all I wanted to share. Thank you.
Thank you so much. Thank you so for the wonderful presentations. Coming back to you, Neha, parametric insurance, talk of the insurance world, everybody is talking. My only reservation about parametric insurance is that you talk in terms of magnitude of the event, whereas traditional insurers talk in terms of magnitude of the losses. So how do you explain parametric insurance in the context of this argument?
Thank you. So firstly, I'd like to just quickly begin with, thank you to NIA for organizing such a great conference and for bringing multiple stakeholders together here. And as Abhijit said, we've all been hearing about parametric insurance. I think in all the sessions today, it's been mentioned once or more than once. So hopefully this is not the first time you're hearing about it. So just to explain better what is parametric insurance, I think the easiest way to explain it is if I was to compare it to traditional insurance. So in a traditional earthquake policy, what happens, the client has a policy, there's an earthquake event that happens, and then there is loss assessment, surveyors going in assessing the loss, etc. And then once that's determined, the loss is paid. That's a traditional policy which we are all aware of. Now, let's say the client is looking to have a parametric policy. So what happens prior to policy inception is that we would work with the client to come up with a structure for earthquake, which could possibly look like this. And please note the numbers I'm going to say now are purely for example purposes, and it can be changed depending on what the client's needs are. So now let's say the structure looks like this, that if there is a magnitude 6 earthquake, the client will get 20% of the total limit as a claim payout. Let's say there's a magnitude 7 earthquake, there's a 50% payment, and if it's 8 and above, it's 100% payment. Now, the client agrees with the structure, we are okay to provide the capacity for this, and all goes well, and policy incepts. Please note this structure is noted down in the policy document, right? Now, let's say an event happens in the year, and there's an earthquake of magnitude 7 that hits the client's location. So now what happens, and this is where the difference lies, What's going to happen is we are just going to go back to the policy document and see that, okay, magnitude 7, client gets a 50% payout. So if the client has bought a policy for 100 crores, we pay out 50 crores, no questions asked. So there is no loss assessment, there is no surveys, etc. We pay out the claim based on the trigger. Hence, these parametrics are also trigger-based policies or index-based policies. And due to this reason, the claim payment for a parametric product is made out between 10 to 14 days after the event, which again is of a big advantage because when a disaster strikes, whether it's a country, whether it's a company, whatever it might be, you need the money quickly to start rebuilding. So that's the key difference between parametrics and traditional, and hopefully you understand parametric a bit more now.
Thank you, Anaya. So coming back to you, Mr. Chaudhary, do you think bundle product has a future in earthquake? Because in earthquake, most jurisdictions, possibly Nepal is one exception, you only pay the property damages. The life isn't covered. I believe Nepal covers life also? Right.
Thank you, Mr. Abhijit.
And also adding on to it, can't we also cover liability, small liability also? Because my building damages another's building which is uninsured. So do you think bundle product has a future? Because you cannot make the customer go for buying every product. Business-wise, I understand that doesn't make sense. But if you look at from the customer's perspective, that makes a great sense.
Thank you very much, Mr. Abhijit. Every matter makes the sense. So it's like that. So we are talking about this fire policy and add-on panels, no? So if it is burden, it's just like the branding, no? So the product is same, but how you're branding your product to sell to your customer, that's the one thing. So in the NAPTIS contest, we thank to the NIA, Nepal Insurance Authority. If they don't make the compulsory insurance, this earthquake insurance, the less than 1%, even the total estimated losses, it was not covered. So thank to them. So because of that, it was an opportunity. So only thing is that we have to think about the premium rate and versus risks. How much risk is there? If it is bundle or it is the add-on cover. So you have to quantify the loss versus premium. So that's it, I think. So it's just this bundling is just, it's like the making some of the innovative product as per the market needs.
Right. Thank you so much.
And for the liability, the second question was liability. If your house or if you are insured, so it doesn't cover the third-party liability because you have to insure. As you said, there is an insurer interest in the insurance principle. So your own property has to be insured by you, not by the others. It's not a motor, this thing, no. If it is the vehicle insurance policy, it's fly on the road, so we have to take for the third-party liability or something like that. For it is non-movable things, you have to insure yourself and be secured yourself. Thank you very much.
So, thank you. Coming back to you, one of the premises of PUL is that you have to be proactive instead of reactive. So after 2015, everyone was reactive. After that, it's almost 38 years. What kind of proactive initiatives Nepal Reinsurance or Nepal insurance industry or the regulator has been taking or should be taking to guard off some of the losses which could have been avoided?
Thank you, sir. I think one aspect he already mentioned that before the earthquake, our regulator insists to the market that automatic coverage under the integrated type of the coverage what we have experienced. Apart from that, regarding the future perspective, there might be different kind of the practices which we can carry on, like Japanese practices where is compulsory reinsurance for the earthquake. Maybe Turkish.
How strictly are you observing the building codes?
Sorry, sir?
How strictly are you observing the building codes when underwriting policies?
Well, underwriting policies regarding after the earthquake, there is improvement in the code of conduct, building code of conduct. That is one aspect. And underwriting aspect, obviously all insurance companies, they are also paying more attention than earlier. And from reinsurance perspective, also we are also taking account that if such severe earthquake comes early again in the future, so what would be our exposure and how we will get the reinsurance coverage. So all these areas we used to take in account. And simultaneously, we are doing a study under Nepal Re that how we can set up a pool for the cat or reinsurance. Earthquake pool only. So it is also under the study. And after that, maybe we will have a concrete solution for the market.
Before I open the floor for the question from the audience, one last question. There's a strict compliance, if you can, of building code has resulted in reduction of losses of life, but it has increased the material losses because reinforced cement or LGFS, whatever you look, so whenever there is a major shaking, the whole structure needs to be removed, replaced. It cannot be repaired. So in terms of material damages, what we have noticed in various jurisdictions, that has really gone up. What really is needed? How can we bring down that losses? Life losses, yes. Even many jurisdictions we have seen, because of this strict compliance to building coding, it has really brought down the life losses. Do you think anything can be done to bring down the property damages? I think you press it,
Okay. I think as the economic prosperity increases in any country, there is a higher compliance to the building code, and the higher compliance to the building code would invariably increase the cost of construction. And I feel any society, if they have to do a trade-off between cost of construction and higher insurance claim versus saving life, clearly prioritization should be given to saving life. So I think it's nature of the business we are in that cost of compliance, increased compliance will increase the claims burden, and that should be fine. I think that should be fine because also your premium changes in relation to the value of the properties that you are insuring. So I think I would rather want countries like Nepal and India to increase the cost of construction and save the life and let the insurance take care of the higher claims burden as it happens anywhere else in the world.
Thank you. You are advocating a trade-off between these two aspects. Thank you so much. We had a wonderful conversation, ladies and gentlemen, with our distinguished panel members. So I open the floor for some questions. Look forward to questions. If you can ask a few questions, raise your hand. We will love to take your questions. Any of you? So after sumptuous food, lunch, it's difficult to shake off, it seems. Yes, ma'am. Please go ahead.
I have two questions to the panel. One is about, you mentioned about pool, earthquake pool.
Pardon?
Earthquake pool.
Yeah.
I just want to understand whether earthquake pool is a better concept vis-a-vis the products which cover, individual products which cover this earthquake pool. For the simple reason, as you are well aware that terrorism pool is something which we have in India, and the accumulation goes on and on. No one knows when the claim, and we wish that there shouldn't be any claim. But what happens is, at some point, insurance companies may want to claim that as a capital, as their asset, because their liability valuation could be less vis-a-vis the assets that have accumulated in the pool. So that could really bring a kind of an issue for the regulator or the pool manager to think whose assets they belong to, because that would have been accumulated for generations. So I just wanted your understanding about it. That's the first question. The second question is about life, personal accident, and health policies. Do you think that there should be a group earthquake, life, personal accident, and health policies sold to governments so that there is a reduced burden to the system, government, and the public whenever there is a hit in terms of these catastrophes, not necessarily earthquake? Thank you. Thank you.
I come back to your second question. I always believe that we can always go for an integrated product where we should be covering PA and health. Look what has happened. 288 lives have been lost in the recent train tragedy in Orissa. For 35 paise, those who went for this, the PA cover, only for 35 paise, 10 lakh PA cover was there. 35 paise only. The only problem was that was an option given by the IRCTC. I have a feeling that make it compulsory, take a little more, because railway journey is one way coming back or one way going back. So PA and health should be covered. That's what when I'm talking about bundle product, I always strongly believe that you sell one product, so your life, your health, and also the material damages, everything stands covered in one product, so that customers don't have to go from door to door. Well, I have to buy one PA cover separately, one health cover separately, and another one the earthquake cover, which will only cover the property and damage. As for the second question, will you like to reply the first question?
Yeah, the first one, I'm happy to provide my perspective on your question on pool solution, whether it's better or not. I think pools have a particular purpose, and if implemented in a timely manner, they can be quite effective. And I'd like to bring the example going back about 20 odd years. In 1999, there were two large earthquakes, one in Turkey and one in Taiwan. And both the countries, within a couple of years after these earthquakes, they went on and set up the compulsory residential earthquake insurance pool. The reason was very similar to what happened in Nepal. When a big earthquake happened, insurance penetration was just about 1%, and almost nothing was insured for the private individuals and their homes. Exactly same experience Turkey and Taiwan, they went through. Now, one can criticize these pools for not providing full coverage, comprehensive coverage, there were gaps and everything, so I get that. But fast forward 2023, the most recent Turkey earthquake that happened in what, February? The insurance covers about 15% of the overall economic losses, right? Economic losses from that event was about 30 billion, and insured losses are likely to be 5 billion. So it's 15% of the economic losses are covered by insurance company. Compare that to Nepal earthquake, just about 1% was covered by the insurance company. And majority of these losses are being paid by the Turkish insurance pool for the private residences. So for me, that's a good demonstration that these pool solutions have worked. If you go back to a more developed country like New Zealand, where an earthquake pool has existed now for about 40, 50 years, during the recent earthquake, about 50% of the entire insurance losses were paid for by the residential insurance pool. So for me, these data points are a very strong demonstration that countries like India, Nepal, they need the insurance pool to be able to cover the maximum part of the uninsured losses that have existed and reduce the protection gap that a number of experts in the morning sessions have talked about, right? So does it work? The recent Turkey earthquake is a good example of the effectiveness of this solution.
The flip side is that the Turkey or the California pool, say for example, the Turkey pool, what has happened? Initially, the coverage for household, the domestic insurance went up. But that graph has again started falling. People are not going with the same intensity the way they went in the beginning of the tragedy when it took place. The most important thing that needs to be understood here is that the awareness level is extremely low. You build on anything, and if the awareness level is low, if people don't know what they exactly are buying and what they are buying, that doesn't make really great sense. So what we need to do is that the awareness level, a lot of strong campaigning needs to be done. Look, this is what you require. This is what will protect you. Like, as I said, the railway accident, 35 paise and you get 10 lakh. The government of India is not coming forward with that kind of compensation. And if the insurers at this particular point of time cannot hide the virtue of insurance, then I don't know when will they do it. This is the right time to tell the world, look what insurance can do. If this is how insurance is propagated in days to come, possibly we are going to do a great service to the society. Any other questions? If you,
I think regarding the Turkeys, I think in 2000 there is a pool set up, and then even the earthquake took place in urban areas. And the two things, one aspect is the awareness of the insurance requirement of pool. Earthquake coverage was also much more higher than our Nepalese territory, and simultaneously the coverage was also very good. I think that is also one contributory factor.
right, thank you so much. So one more question we'll be able to take. We have 5 minutes of time.
Yeah, thank you. I was just wondering regarding parametric insurance, whether the benefit goes to poorest of the poor of society or not. Because I could gather from your presentation that it will trigger when there is a 6 Richter scale or something like that, and then you'll be paying 20%. But then those who are on lowest strata of the society, their house will perish much before that, and they will not get anything. So in that context, how justice will be made to them by going for parametric insurance?
Hello. Okay, so if I understand the question correctly, you meant like what if the parametric policy only triggers on 6 magnitude and above, right? So that's exactly what I said before. I took the example of the structure. So purely an example, if someone wants to buy, magnitude 4 and above or magnitude 5 and above, they can. So it depends on the policy that they have, and the structure that I took while speaking was only an example. So, I mean, just to give another example on the opposite side, right? So we've spoken about the masses who may have a, damage from magnitude 5. But let's take a bigger client who, let's say, has a structure that can handle up to magnitude 7 of an earthquake, right? So now, if they want, they can only buy magnitude 7 and above. So it depends on the client's needs. Our structures, parametric structures are completely flexible. Does that answer your question?
In the beginning of my presentation, I talked about induced seismicity. What happens there? The frequency is very high, and the damage level is not that high. It's low, 76% you showed in your presentation. What happens when it is high on the scale, 5 and above, then only the government starts taking notice of it. Even the civil society comes into picture. Below that, nobody really looks at that. People have a feeling, okay, if it is less in the Richter scale, possibly it has not created that kind of havoc, that kind of loss. That's not the fact. If you don't address the marginalized population, if you don't look at the socio-demographic profile of the population, possibly you are not doing the right kind of... so that's the reason when I said that when you are looking at the definition of earthquake peril, are we going to cover induced seismicity or not? Something needs to be seriously looked at, because that will serve the purpose. So possibly...
Sorry, can I just add one more point to that? You said, okay, people might say, oh, it's magnitude 3 or something, but in a parametric policy, if let's even say the policy structure has magnitude 3 and above, you get paid out, there is no dispute over it. You will get that paid out. So let's say the government of Nepal buys, magnitude 4 and above for one area of Nepal, magnitude 5 and above for another, depending on what are the requirements. As long as USGS, which is the United States Geological Survey that captures all these earthquakes, as long as they capture that it's magnitude 3 or magnitude 4, a parametric policy will pay out. And USGS also captures, low intensity earthquakes. So I think that's, again, probably another difference between parametric and traditional. It's trigger based. If the earthquake happens, regardless of the magnitude, if it's mentioned in your policy paper, you do get paid out within a week or two.
Thank you, ladies and gentlemen. It's still 5 minutes?
I think there is no question from the floor, so I will ask. Oh, okay.
Okay, am I audible to you?
Yeah.
Okay. Yes. Sir, actually, what we are talking is the pool is a wonderful idea where the insured is getting benefit. The question here is, what will be the modalities that should be observed by each insurer in that? Particularly, what will happen is that is going to affect the solvency of a company. Okay. Now, how do you distribute the liabilities and assets in that case? That is the thing whether panelists can throw light on that. Did you understand my question?
We were not able to comprehend your question.
Okay, what I am telling is, pool is a wonderful idea because pool is contributed by various insurers, right? Every insurer pays some money to pool for this undertaken for the entire group. What is the purpose of pool? Who is contributing money to pool?
So if I understood you correctly, you are saying every insurer contributes to the pool. Depends on how the pool is set up, right? So one could be that all the earthquake risk, they are sold by the insurance companies, but ceded back to the pool, right? So pool then has, and that's how Earthquake Commission in New Zealand works, pool then ends up creating over a period of time a pretty large capital buffer to be able to pay in case of any eventuality, and insurers, they get the commission for acting as more of a distributor, right? So the risk is entirely transferred to a central body that buys the right reinsurance at a market level, has the capital to be able to pay back when something happens.
What you mean to say, the pool takes over the entire liabilities and assets?
Pool takes over the liability and then finds...
so there is nothing to be done by the insurer in that regard?
Yeah.
So you cannot take the credit for the...
As I said, there are different structures of the pool, right? In some structure, you can also say insurers retain a certain percentage of the risk, balance is ceded to the pool. So it depends on how that is getting structured.
Exactly, that is the point you have been asking, in fact. What should be the modalities for that?
Modalities for?
For insurers? Because for the assets and liabilities
I think
from the pool.
one pool that works very well, in my opinion, and it doesn't work perfectly, right? I have to qualify. There is no perfect solution. There are solutions that work, and there are varying degree of grayness in how well they work. I really believe the Earthquake Commission of New Zealand works very well. So what they have done is they have capped the amount of payout. No matter how expensive is your property, there is a cap on amount of payout that the pool will pay. But as an insured, you can buy a private cover over and above what you are buying for the pool. So until that cap, risk is entirely ceded into the pool, and that's a mechanism that works. Proof of the pudding is that in New Zealand there is more than 90% insurance penetration for residential building, and as I shared the data in the Christchurch earthquake, 50% of the losses were paid for by the residential building. Right, so that's one. There could be a structure of Turkish pool, which is much more restrictive, but that's also a pool that works in the economic situation of that particular country. So it's about, if a country is interested, there are solutions that exist that can be kind of tweaked for the respective need of the country.
So thank you, ladies and gentlemen. Thank you, panel members, for a wonderful conversation. Thank you for your patience. Thank you for your attention. Look forward to interacting sometime next in Nepal. Till then, goodbye. Thank you so much.
Thank you very much to our fabulous moderator and our panelists as well as presenter for this insightful session. We would now like to invite on stage our Chairman of Nepal Insurance Authority, Mr. Surya Prasad Silwal, to kindly join us on stage to present a token of appreciation to all our panelists, moderator, and presenter, who really highlighted some very key and important aspects on earthquake insurance. They also shared their experiences, and thank you to our audience as well for those engaging questions from the floor as well. So we'd like to thank our distinguished panelists and presenter, Mr. Chunky Chetri, Chief Executive Officer, Sagarmatha Lumbini Insurance Limited, President, Nepal Insurers Association. May I please request Mr. Chunky Chetri to kindly step forward and accept this token of appreciation. We'd also like to thank our panelists, Ms. Neha Yadav, we'd also like to thank Mr. Alok Kumar, our panelist, Mr. Alok Kumar. We'd also like to thank our panelist, Mr. Damodar Bhandari. Ladies and gentlemen, this is the third session. This was the third session, Earthquake Insurance Experience from Asia. I would also like to thank our moderator, Mr. Abhijit Chaturaj, Dean, Birla Institute of Management and Technology, for bringing together our panel and their thoughts, and also managing time perfectly. We finished exactly on time. A group photograph of our presenter, panelists, and moderator, along with our chairman of Nepal Insurance Authority, Mr. Surya Prasad Silwal. And with this, ladies and gentlemen, we come towards the end of our third session, which is also the second last session for the day. We now have a tea break for 20 minutes. After the tea break, we hope to see you all for the last and final session here at day 2 of Asian Insurance Meet 2023. Ladies and gentlemen, we hope to see you exactly at 3:50. And now, ladies and gentlemen, without any further delay, we would like to set the stage for our fourth and final session for the second day at Asian Insurance Meet 2023. May I please invite our moderator on stage, Mr. Sushil Dev Subedi, Director, Nepal Insurance Authority. May I also please invite our panelists, Mr. Voravad Chonlasin, Executive Director of AIT Extension, Ms. Neha Batra, Head Risk and Underwriting, Weather Risk Management Services. May I please invite on stage Ms. Shabnam Shivakoti, Joint Secretary, Ministry of Agriculture and Livestock Development. May I also please invite on stage Mr. Sanjeev Shrestha, International Fund for Agriculture Development. May we also please request Ms. Neha Batra, Head Risk and Underwriting, Weather Risk Management Services, to kindly join us on stage. And I'd also like to invite Malay Kumar Poddar, ex-chairman and managing director, Agriculture Insurance Company of India, to kindly join us on stage. He'll be presenting in this session. This is the last session for the day. We're talking about agriculture insurance, developments, and practices. And because this is the Asian Insurance Meet 2023, and many different countries in Asia have agriculture as an important aspect in their economy as well, I think this will be a very insightful session. So may I please request all our distinguished guests to kindly come in and join us. And I'd now like to hand over the proceedings of this session to our moderator.
Namaste and thank you very much for choosing us as a panelist and moderator. Today we are going to discuss about agriculture insurance, its practices, its challenges, and probable solutions. For this, we have Mr. Malay Kumar Poddar with us. He is a former chairman and managing director of Agriculture Insurance Company of India Limited. So first we will listen his presentation and then after we'll discuss on it. So Mr. Poddar, it's over to you.
So good afternoon, everybody. At the outset, my heartfelt gratitude to Chairman, National Nepal Insurance Authority, and the senior officials from the regulator, and the delegates from the insurance industry. It's very heartening to see that even after, though this is the last session of the day, and post-lunch, the second one, still hall is quite full. So I have been asked actually to talk about the crop insurance, what is going on in India. So many of you may be knowing that crop insurance in India is 50 years old, right? It started with a pilot in 1972, and it is constantly evolving even today, and probably in future also. So this is the items actually I would like to cover. It is a little bit lengthy and wordy kind of a verbose presentation. Please bear with me because I wanted to share the information as much as possible and all the information has been culled from the government sources. The first source is Ministry of Agriculture and Farmers Welfare for Government of India, and they have a comprehensive portal, National Crop Insurance Portal. So data has been collected from there. So I have duly acknowledged that. And the technology part is collected from, I have a very good friend there, Director Dr. C.S. Murthy. He has helped me with his slides. So it is whatever that I am going to present, it is sourced from the Ministry of Agriculture and Mahalanobis Crop Forecasting Center. That is the technology arm of Ministry of Agriculture. So first of all, as I mentioned, that PMFB is ever developing. And second is that leveraging the remote sensing and data analytics in crop insurance. As we know that everywhere, wherever there is a huge number of data is being churned out, so data analytics, deep learning, machine learning, artificial intelligence has come of age. So why not crop insurance? And some of the models which have come within PMFBY and outside PMFBY and running quite successfully in India. It has brought the sustainability factor into this PMFBY scheme. It has become economical for the whole insurance industry to manage the risks that way. So I'll be discussing about that. Those are the alternative models. So let's start. Pradhan Mantri Fasal Bima Yojana has started in 2016. And as I mentioned that India has an experience of 50 years of running various models of crop insurance. So ultimately it is the blending, a good blending of area yield index and parametric solution, which is basically weather-based insurance schemes. And all the crops are now being covered, all field crops, commercial and horticultural crops. So basically there are two aspects of this. One is that a safety net protection, which has been given for the widespread calamities like drought, large-scale dry spells and all. And blending in the sense, this is on an index basis. And there is an indemnity-based farm level assessment of losses done. So these are the 6 peril in the third point. Okay, and the implementing states means India has 30 states, at least 17 states are now implementing Pradhan Mantri Fasal Bima. They have been given a choice because the risk premium will go up if the choice is covering all the perils and all. So they have been given a choice either to choose for the basic one, which is indexed based, or any or many. They can choose, prevented, failed sowing or germination failure, which occurs within a particular period, say 30 days from the date of sowing or planting of the crop. Then there can be, suppose the crop has been planted, it is doing well, but there can be dry spell after 6 weeks or 7 weeks, or maybe after 2 months, crop may totally dry away. So we call it mid-season calamity. So that is also paid on an index basis, right? And then comes localized calamities that can be hailstorm, landslides, and all those things. Those are all settled on the basis of individual farm survey, okay? And it's an indemnity kind of thing. So that's why it's a good blending. Then post-harvest losses also. So suppose the crop has been harvested and kept on the field actually for sun drying and all. So there can be unseasonal rainfall coming, cyclones coming from the Arabian Sea or from the Bay of Bengal. It has happened several times. So for that also, is a farm-based loss assessment is done and indemnity is paid out. Then another add-on cover is there, which is called wild animal damages cover. So as I mentioned, it is the most comprehensive product that has been developed, and out of 4 decades of experience, and now it is the world's 3rd largest crop insurance program, having $4 billion of premium volume. But it is now made, from 2020, it has been made voluntary for the farmers, whether it is a borrower farmer or the non-borrower farmer. The reason it has been made voluntary because the index insurance, as has been discussed in several sessions in the morning, that it's a parametric insurance doesn't actually help the farmer to relate to his own losses, okay, to the indemnity that has been paid. So naturally, farmers are becoming a little bit tired of, this area yield index, parametric insurance. So they wanted a kind of some option has to be given to them. Otherwise, they say that, okay, we are being taxed if we make it compulsory. So that's why it has been made voluntary. But before that, almost 35 years, it was made compulsory at a very, very low rate. All the farming community in India, actually, they have understood the benefits of crop insurance. Even if it is made voluntary, last 2-3 years, the impact is not much on the enrollment. So premium rate has been kept very, very low, very affordable, 1.5% for Rabi seasons, which are after monsoon, and Kharif season, which is monsoon season, and 5% for the commercial crops. Insurance companies, they bid in a tendering system. Tenders are always invited by the implementing states, and they win clusters of districts for a 3-year block. Okay. So 3-year block, why it is 3-year block? Because if the insurance company is chosen for 3 years, they will be accountable, they will be responsible actually to give proper service to the farmers. 3 years is quite a number of time, and that is the reason it has been made 3 years. Similarly, weather-based crop insurance scheme also is a blended product. It is not only parametric, which is trigger-based, no. It also covers high wind speed, particularly for banana crop, and hailstorm also. And it is, of course, currently it is not a very big of the total PMAB WBCIS program, around 10%. So next slide shows the seamless administration which has been developed after the advent of PMAB from 2016. As I mentioned, that there is a national crop insurance portal. It's a one-stop shop actually. It's a data repository, all the enrollment data, farmers, demographies, area coverage, everything is available on this national crop insurance portal, right? And this national crop insurance portal also helps integrating with the core banking solution. In India, actually, all the banks, they have a target to give 16 or 17 or 18% of their total advances in the priority sector. And the priority sector, agriculture sector, is the foremost. So if you integrate, so the farmers, whenever he is taking a loan, although it is a voluntary, so banks can debit the premium from the banks, from the farmer's account and send it to the National Crop Insurance Portal. 70% of the premium actually comes through banking channel, so that's why this is needed. The integration is needed. So NCIP, Government of India, Ministry of Agriculture has done it. Then DigiClaim module, direct benefit transfer to the farmer's bank account from the portal itself, National Crop Insurance Portal. It has started last year. So claims are actually computed on the portal itself and paid out. Okay, paid out, and there is a bank account of the insurance companies, and NCIP also now it's integrated. Okay. Then CC Agri app. We have developed this mobile-based CC, this recording, videography. So there are almost 50-60 lakh CCs actually held for Kharif and Rabi season together, and almost 70-75% of the CCs are actually captured on the mobile. A dedicated mobile app has been prepared, and those are directly coming onto the NCIP portal. So that actually authenticates that, yes, the CC has happened physically on the field, and it has been recorded with lat long, timestamp, everything. Automated weather stations, automated rain gauge stations data are also now being actually collected on the National Crop Insurance Portal. For that, a separate intervention government has started in the current year, which is called WINDS. I'll come to that, there is a slide on that. And satellite UAV, Remote Sensing Geographical Information System, RSGIS data repository, that is coming through another intervention, ESTech. So that is also all built into this entire seamless administration system. So at the same time, it is, PMAB is highly, highly subsidized. Almost, I'll show you the next slide, what is the percentage. These are the absolute amount, but you can look at the bars. The blue bars are the gross premium, whereas the yellow bars are the subsidy, which is roughly divided 50-50 between the central government and the state governments. And the gray bars, small gray bars, are only the farmer's contribution. So in percentage-wise, you will find that In 2018, it was 83% is the government subsidy of the total premium, 17% of the farmer premium. And over a period of, say, 5 years, from 2018 to 22, on the last bar, still farmers are paying only 14% of the actuarial premium. 86% is subsidized, is actually paid by the government, central and state, on a 50-50 basis kind of. So what is the claim ratio? If you see from 2016-17, it was actually going up and reached 100% in 18-19. But after that, because of the CCE Agri app, which has been started from 2021, so it has started coming down. Of course, 2021-22, that 55%, it is an underestimation because not all the claims have been properly reported or it has not been paid out. And probably IBN or reservation is not taken into this NCIP portal. This data has been collected from the NCIP portal. But overall, last 5 years, it shows claim ratio is around 80%. And I think it is quite sustainable from both angles. But there has been certain challenges also. Of course, of late, it has been a little bit mitigated. If you see from 2016, it is going up premium rate. This is all India average premium rate, right? Across all the states, all the crops, across both the seasons. It is going up, up and up. But from 21-22, it has come down. And probably in the current year also, it will be coming down. And there is a reason for that. I have a slide for that I'll be explaining. So there is one more challenge that, okay, so much good things about PMFBY, then why this area under insurance is remaining stagnant? Certainly this is a problem, and this is just to highlight that when you make the scheme voluntary, farmer exercises his own choice, right? Always he expects that, I think in the morning session also this, I think Mr. Arup Chatterjee only mentioned that he is not insured, he is self-insured kind of thing. Farmer also believes like that. In fact, in one of the forum actually I mentioned, probably the kind of, the donations we put into this Dan Peti, the donation boxes in front of the temples, if you collect all those things, that will be probably 5 times, 6 times than whatever the crop insurance premium that Indian insurance program generates. Well, these are the slides actually a little bit verbose and technical, but I thought that I should show it to you. So it all started from the challenges. Challenges, as I mentioned, that hardening of premium. This hardening of premium, not only the direct premium, but also the reinsurance premium, hardening market. Then loss assessment, yield loss assessment is a challenge. Then low farmer participation also challenge. How do you overcome this challenge? What is the solution? So after a lot of brainstorming, actually, it has been decided that we should go in a technology way to give more transparency, objectivity, and quickness in disbursing claims. Most of the grievances of the farmer, it is not the quantum of claims, but the timeliness of the claim, delay under PMFBY. Of course, for prevented sowing, mid-season calamity, localized losses, insurance companies are paying claims as quickly as possible. But for season-end claims, actually, there has been delay. So that's why, as we all know, the satellites, drones, smartphones, and weather stations, these are producing enormous amount of data on crops throughout the life cycle. So how to use those things? So it is possible actually to map a particular crop area. We call it area estimation or mapping of crop, and you can constantly monitor the crop health, okay? And developing yield proxies and modeled yield estimates. I think Mr. Alok Kumar will be knowing it very, very well. And digitization of the CCE process that we have discussed through the CCE Agri app, and moderation of biased yield data through the satellite and drone images has become really, really handy for settlement of claims, actually. So what are the benefits of this technology intervention? Is that rationalization of loss assessment system, which makes it more tangible, more transparent, and minimization of the moral hazards, because it's always, whenever there is a crop cutting experiment takes place, huge number of farmers will be gathered, there'll be local influences and all. When you use technology, you can avoid those things. Timely settlement of payouts, enhance the transparency, reduce administrative cost and hassles. And the spin-off benefits, when you create a huge amount of data, there can be a substantial reduction in the premium rates based because the actuaries, they can work on larger number of data, can quote premiums properly. And of course, all these things will ultimately lead to increase in the coverage. So basically, the Government of India, this Mahalanobis Crop Forecasting Center, they're embarking onto this data-driven, evidence-based. Image is an evidence, so evidence-based crop loss assessment, and this is not just a dream. This has come out of last 6 years experience. Pilot has been done through some 11 different insure-tech agencies, agri-tech agencies, okay? And it is the outcome of that. Now, whole results are now into consolidated, and they have made one particular document that is called ESTEC. ESTEC's full form is that Yield Estimation System through Technology. So what is the purpose? Reduce dependency on the manual assessments like crop cutting experiments and automation, transparency, timeliness, and cost effectiveness. There are 3 major initiatives, that ESTEC, nationwide implementation of technology-based yield estimation, then augmentation of weather data infrastructure, data collection and data repository, then smartphone-based crop data repository and assessment. It is done through this Cropic, this particular intervention. So ESTEC, okay, some of the points are already covered. Basically, it is a mainstreaming of the scalable yield models. Mind you, these are yield models we are talking about into PMABY. It's a nationwide implementation that is being going on, and it started from 23-24 only, this from the current year. What are the outcomes? Outcomes will be combining tech-based loss assessment with existing manual CC. It is not, India is not simply dispensing with the manual CCs, because manual CCs, the advantage is that it is happening on the farmer's field. Farmer can see it, that okay, the people have come, they have done, they cut the crop, they have threshed it, they have measured it, he is present, and there is a particular form, he is also putting his signature there. So if the whole thing is done from the satellite, from the eye in the sky, then farmer will have some doubt. So that's why we are going into a hybrid mode. But actually, they'll be gradually reducing the dependence on the manual system. Okay. And what are the recommended approach? Recommended approach and the models are one is that direct yield estimation. There are 5 different pilots which have been done, semi-physical, machine learning, deep learning, crop simulation, ensemble. I have a detailed slides for that. I think time will not permit. So offline we can discuss if somebody is interested, maybe during the gala dinner or maybe whatever. Then in the indirect approach, we have one CHF model, crop health factor model, parametric index of crop performance. It's a proxy insurance, crop health factor. Just like we have our health insurance, why not crop can have a health insurance kind of thing? It came from that. But it is based on a very, very composite, comprehensive performance index, which comes from various parameters like NDVI, LSWI, FAPR, and all those things. So how the recommended weightage, how it will be done? Because it's a hybrid mode, 70% weight will be given to CC yield, and 30% will be given to this modeled yield generated through these technologies. And indirect approach, it is the same, 70-30. So there is an implementation framework prepared. At the top level, at the Ministry of Agriculture, Government of India level, there is an ESTEC committee who's overseeing actually. They have prepared a SOP. And for the states actually, there is a mentor agency already earmarked. They are basically from the government sector, like National Remote Sensing Center. They have regional centers also. They will be basically, or maybe ISRO, Space Application Center. They will be the mentoring agency. Then there is a selection of technology implementing partner. This technology implementation partner are none but those who have done those pilots for the last 6 years. Then the implementation of models as per SOP, there will be mentoring, execution, and there is a dispute resolution mechanism also there. So on the Weather Information Network data system, which is WINDS, naturally, we have gone through that, what is the current status of data infrastructure, whether automated weather stations density, that has to be increased, and what are the perils actually that need to be covered through this weather insurance. There are 8 perils you can see, and what are the weather variables. But to have that, you need to have proper weather station density, and also maybe the gridded data that we can get from IMD or from international. There are some, this thing is there, like CHIRPS and all. So India is now thinking of, increasing the weather density, weather stations density. Currently, we have some 20,000 automated rain gauge stations, okay? And automated weather stations, some 13,000, but those are not enough. Requirement for high density spatial and temporal data is automated rain gauge stations. They're thinking of having 2 lakh at every Gram Panchayat. Gram Panchayat can be one village or maybe a cluster of 2, 3, 4 villages depending on the population. Automated weather stations they want to have in every block, right? So this is the plan, and for that also there is a implementation framework they have prepared at national level, at state level, and at the ground level. At the national level, just like ESTEC, there is a committee, okay? And NCIB will be doing the data hosting. Then Quality Council of India, they will be actually monitoring the weather stations, whether it is working fine, whether the sensors are working, whether battery is operating fine, and all those things. State government will be providing the site, means space actually for siting these automated rain gauge stations and weather stations. Then ground level, it is the implementing agencies. The whole thing is a PPP mode, you can see that. And on the photo analytics, that capturing this thing on the mobile phone, for there also, this data analytics, this thing, the deep learning algorithms are now in place, which is called convoluted layers. And this is actually now the government is trying to do. So you have the satellite data, you have the weather data coming from the weather stations. And if you have number of this photo analytics, picture captured through this mobile with crop surveillance and all those things with the georeferencing, then you have a composite, data which can be really actually will be able to assess the losses. Now, this is within the PMABI, which is happening within the PMABI. But outside PMABI also, there has been experimentation which has been really successful going on for last 3 years in one of the state, Bengal, West Bengal. And the scheme is Bangla Shoshya Bima. It is outside the PMABI, Bengal government's own scheme, funded by them totally, free for the farmers, for the cereal crops, for the field crops. It has, I would say that it has brought a paradigm shift in the crop insurance solution. I'll show why it is. So it is basically remote sensing based loss assessment. Bengal government has totally dispensed with the crop cutting based yield estimation because it was taking a lot of time, a lot of anomalies in the crop cutting data. So they are now depending on this comprehensive crop performance index. There are 5 parameters actually captured, as I mentioned, NDVI, then LSWI, then FAPR, and also this from the microwave data also collected. It is replaced actually the CCs. And the data, you see this, every 5 days or 12 days it is coming. And the data size, the pixel size is 10 meter by 10 meter or 20 meter by 20 meter. Means this hall can produce 20 pixels, 20 pictures. So from there, you can easily find out, yes, this is a stage, this is some round tables. Okay, you may not be able to measure that what is the size of the round table, but you can understand, you can differentiate between that, yes, this is a stage, blue color, that is something which is white color and all. This much is possible. So this data you get every 5 days or 12 days. So you think about a crop which is 120 days, 130 days, how many data sets you have. And literally, since it is a picturization, it takes, picture of each and every farm. And not only that, you are not happy with that. We have done enough number of ground truthing with the mobile app. So what you are seeing from the image, to what extent that is correct, you try to test with the ground level surveillance. That is done through this mobile app, which is particularly prepared with the help of NRSC, National Remote Sensing Center, and it does 8 to 10 times more number of ground truthing than the crop cutting experiments used to have. So Naturally, with this data, you can prepare a dashboard, share the data almost on a near real-time basis with the government, which will have this remote sensing values, CHA values, and claim disbursement. And what are the results? 90% of the farmers, Bengal farmers, are now joining this scheme. Of course, you may say it is free, but at the same time, this each and every farmer's KYC, know your customer, is being done physically by the insurance company through these intermediaries. And claims are settled. This is the highlight. This is the most important. In 3 weeks of time, it has been done whenever there is a cyclone-affected, calamity happened actually. So what are the advantages? It is financial advantages that, to start with, we have reduced the premium rate by 20 to 25%. Initially, introductory offer was like that. Okay. Then, the refund of cumulative surplus to the government. And already, 20% of the surplus has been refunded back to the government. It has never happened in Indian insurance, in the crop insurance history ever. And the entire risk is borne by the insurer and the reinsurer. It has been supported by the reinsurers all over the world. And what are the other cascading benefit? Generation of huge number of data, 100 TB per year, can be used to fine-tune agricultural production strategy. In fact, the Bengal Principal Secretary said that why don't you create a kind of a, this actuarial section, data analytics center in the Ministry of Agriculture, in the Department of Agriculture itself, so that I can fine-tune my agriculture production processes, like diversification of crop at a block level, at a tehsil level. So these are and the most important, all the administrative hassles of doing so many crop cutting experiments have been taken over by the insurance company. So no hassles they have to now face for doing those planning of crop cutting experiments and executing. So there are other models which are within the PMAPY. Just 2 minutes. I think Bill has prompted me to come to thank you straight away. So one is that you have seen that premium rate was going up and up. And the last I told you that it has come down. In the current year, probably it will be coming down further. The reason is that the hardening of reinsurance market for crop insurance in India. So we decided, insurance industry and the state government, they decided about to find out a kind of a way out, to work around kind of thing. Those are actually cap and cap model, 80%, 110%, or 60-130, or profit and loss sharing. How does it work? If the loss ratio is below 80%, then refund is given to the state government, right? But on the downside, if the loss ratio for the two seasons, Kharif and Rabi together, if it is more than 100% in a cluster, then it is paid out by the state government. So since the crop cutting experiments done by the state government, so there is a skin in the game from the state government's authority. So it has reduced the premium, and there is no reinsurance requirement. Of course, some of the insurance companies are purchasing stop loss even for the 10%. And not only that, it doesn't come, it is not standalone. It comes with the remote sensing data also, supported by remote sensing data. So progressive this weightage will be there actually on the using of remote sensing data from 30 to 50%, right? Then it helps actually in Maharashtra, in MP, the enrollment of the farmers is going up because of this. So what are the advantages again? There are also upfront reduction in the actuarial premium rate by 15 to 30%. The reason is that there is a loss cap at 110 or 130. Surplus in excess of 20% is refunded to the government. So the government also happy that there is not, the super profit is not made by the insurance industry. And from these surpluses, you can create a cat fund actually, which government can pay out. Probably government can also purchase a reinsurance, stop loss reinsurance for them. Then financial sustainability. Insurance companies are not allowed to make super profit, that I have already mentioned. And the stop loss protection government can purchase. So these models have come along with this end-to-end RSGIS technology support from the insurer, and not any cost is attached to the government of India. So that's it. I think I have finished. Sorry, as I mentioned to start with that it is a bit lengthy, but I thought that I should share what is happening in India with you. Thank you very much.
Thank you, Mr. Poddar. we want to continue this discussion with asking questions with our prominent panelists. My first question goes to Ms. Neha Batra. As you are engaged in supplying the weather stations and installing weather stations, many insurance companies, especially non-life insurance companies who are selling traditional insurance product and parametric as well, they are seeking the opportunity in these weather-based stations and their informations to make reliable, to make the information generated from that weather stations to make reliable and to make feasible. What kind of steps we can take ahead?
Yeah, thanks for the question. I guess in today's session, I mean, it's clear that a lot of emphasis is being made on index insurance. So when we talk about weather index insurance, the reason there's a demand for it is because in traditional insurance, there's a lot of subjectivity. With weather index insurance, that subjectivity to some level is mitigated. So that is one reason why weather index insurance is, everyone is talking about it. And coming to why is it required for Nepal, considering 50% of its area is mountainous. And if we talk about weather station network here, I guess only 10% of the stations are in that mountainous region. So there's a need of installing more stations and a few considerations to decide on how many stations have to be installed and where they have to be installed. It would be the topography, the microclimate, and also the insurance industry needs. So these would be few factors to decide how many stations are required. And coming to how those stations, or let's say how that need can be satisfied, I guess it's not just the, let's say, the responsibility of Department of Hydrology or Meteorology, but also there could be public-private partnerships wherein private data providers can come in and install stations. So for example, in India, a few years back, there were only 2,000 stations, but now there are 20,000 automatic rain gauges, and AWS are about 13,000. And the target is to reach about 2 lakh automatic rain gauges. The reason being that as per the geography, as per the topography of the region, more stations are required. If I talk about, let's say, Himachal Pradesh, which sort of has a same area as Nepal, it has hills. So in Himachal Pradesh, there is one station in 5 to 6 square kilometer of area. So in each GP, there is one station. And weather-based crop insurance is being adopted in that state for almost all of the major crops there. So I guess installing more stations with public-private partnership will help in reducing the cost, the maintenance, the operations which is required. And we need to look at a bigger picture here. I guess the stations would not only just serve the purpose of weather index insurance, but there are certain other usage to it. So for example, it could be used for disaster risk management. It could be also used to give agro advisory. So I guess there's a full business model which private data providers can adopt. They can sell the data to insurance companies for designing the products. They can also sell this data to other energy sectors, let's say, which require weather data to do their planning, or maybe to build models around forecast. So I guess there are these use cases, and I guess one other good part about installing more stations is that from our experience, we have seen that reinsurers these days are fine by pricing on the historical available stations. So for example, if Nepal has, I guess, around 300 weather stations, reinsurers would be willing to look at pricing the index insurance products on these 300 stations and settling the claims on, let's say, the newly installed stations, which have a dense network. So I guess that's one way to look at it. And
Okay. Thank you, Neha ma'am. My another question goes to Sanjeev Shrestha, sir. You know, you are working on supply and demand system of this food products. Sometimes what happens is, you know, due to a mismatch of demand and supply, imbalance of demand and supply, agriculture product that doesn't go to the, you know, bottom level and to the targeted people, and due to that reason, sometimes, you know, artificial price hike will be over there. So, to establish an equilibrium point in this demand-supply ecosystem, or, you know, to balance the demand-supply chain, you know, do you think any kind of insurance product are appropriate? If any kind of insurance product or any kind of insurance services are appropriate in this, you know, to support that, do you have think in this way?
Thank you for the question. First of all, I will take the pleasure to thank the organizing committee for inviting me and the IFAD as a guest panelist over here. I think I am the minority. Maybe I didn't see any diplomat partners besides ADB on this forum. Hopefully, in the next coming days, we see more and more diplomat partners and the civil society and Alti Pharma organization on this board, which is also equally are the players of this forum. Before moving forward, just I will take on IFAD works with the government, and whatever we do is we partner with government, we work through government. So that's why in Nepal we have been active since 43 years, and I do believe I myself as a facilitator rather than insurers or service users. I do believe as a facilitator. Why we do broker linkage between the insurance company and the users. That's how we do it, and we are doing in that line. Before moving forward, what I see in this line is that when we talk about insurance reaching out to the farmers, because in Nepal, I think, yeah, we do have the Nepal Insurance Authority, NIC. Where I see that in Nepal, the history is not that much old, like 50 years in India, where hardly formal insurance began a decade ago. And even if you see from there, I think it's only 5 or 6 years where the government has intervened through subsidy, and we see the figures. We have been optimistic. In 2013-14, the premium was 160,000. And now the premium is around 16.8 million. Means we have gone from 100 times increase in the premium. That's give the good optimistic figure for us. But while saying this, we still, if you see when we heard the figure in the morning, the insurance portfolio in the country, we are nowhere. I think it's a small peanut of this area. So before moving forward, what I want to say is that in insurance, what I see from my side as a facilitator, accessibility, ability, and affordability. These three factors play a good role over there in the insurance. And I will come to the accessibility and ability in the later on, but while answering the social question on the how we can improve the supply chain, it helps in the insurance, and how can we make the insurance product along the supply chain that will also facilitate the agricultural insurance. This is how I come to. And when we talk about this insurance, the major challenge, I think, yeah, we do have a lot of companies or service providers who are providing insurance in this country, and they are compelled to provide around 5% of their portfolio from the government in the agricultural insurance. I don't know how much they are providing, that's the scenario. But whoever they are providing, they are still in loss. That's a pity to say over there, because I'm taking this data, I will be pleased to share, we have already shared this to the organizing committee. Last year, IFAD did a study on the insurance, agricultural insurance in Nepal. What are the practices, what are the lessons learned, and what are the things to be moved forward. I think I will be pleased to share that report to all. Hope this will help us in the days to move forward. And when you talk about this supply chain, the affordability, when you talk affordability, the farmers themselves, as you talk about the premium, though we are providing 80% subsidy till last year, still farmers are facing difficulty on the part. And if you see from the service provider side, I don't think it is financially viable. So because our scale of production is quite small, and if you see the subsistence farmers in our country, it's more than 75%. And very few are the commercial farmers. So the scale of production is quite less, and that's the result that our insurance, whatever the number of around 200,000, the scale of insurance is quite low, so that it has not been able to make it affordable. So what I see from my side, until and unless we enhance the commercialization of the agriculture, that is driven by the market. Market-driven commercialization of agriculture is the key to make our to agriculture. On the on-side, and if you see on the other side, we are working only on the farmer side. Mostly whatever product we have developed so far, around 27, 29 products, with based on agriculture, as well as livestock and some herbs. We are mostly working on the farmer side. What I see over here is that though there are products, we need to equally cater the other actors on the chain, the input suppliers, as well as the SMEs and the processors and the traders. Though there are some mechanisms and there are some insurance policy, but when I talk with this agribusiness, when I talk to traders, they are very reluctant, they are not comfortable with the product that we are delivering. So what I want to say over here is that the downstream actors, like the traders, buyers, or the agribusiness or processors, we need to find some products where we can bring them on board so that they can work together with the farmers in parallel, which will help them to develop the supply chain in the coming form. That's all.
Okay, thank you, sir. My next question goes to Ms. Sabnam Sivakoti. Nepalese insurance companies, non-life insurance companies have been selling agriculture product for long ago. Since 2013, Nepal government started providing subsidy. First it was 50%, then it was increased to 75%, and later on it is 80% right now. So, you know, insurance volume and number of insured, both are simultaneously increasing. Sometimes it seems to be increased exponentially. So, to make it sustainable, what is alternative plan to government? It is feasible to provide subsidy forever, or government is thinking about any other options to make this policy, this plan, this project sustainable?
Thank you, sir. First of all, thank you, organizers, for dedicating one session on agriculture insurance in the first place, and also inviting us as the panelist here. Thank you for this opportunity. I think when you, just as told by Sanjeev Shrestha ahead, that our portfolio is growing definitely, because it's been about a decade that government has started agriculture insurance in Nepal. And if we compared with the, where were we in the first year and where are we now, definitely the number of policy has increased, number of farmers has increased, the sum insured amount is increased, and so has the premium that the government provides, the subsidy on the premium. Government started subsidy on the premium. But when Malaiji was presenting, I was wondering, because their experience with agriculture insurance has been for almost 50 years now. For us, we are a decade old, I think. So I think we're still in the infant stage, and for this matter, government has been promoting agriculture insurance by providing subsidies so that more farmers are into this, they come under the framework of this scheme. But when you talk about the sustainability, definitely if we look at the total figure, I was looking at the number, the subsidy amount that government is paying. So it's about 1 billion premium, as the 80% subsidy of the total sub-insured of the premium. We are paying about 1 billion, 1.65 billion in a year. But if you look at the total budget of the national budget or the agriculture budget per se, that amount is not very big as of now. So I think for some years, I think government still needs to provide the subsidy amount, because maybe in the morning also it was discussed that agriculture is getting more riskier with the climate change, and other uncertainties are there. So to retain the farmers in agriculture is another challenge for the government. When we talk about the retaining the farmers in the field, and also from the perspective of food security, the engagement of the farmers is very crucial. So in that sense, I think government still would like to provide the subsidy, and then to reach to the larger number of farmers, to the smallholders, and also to the farmers located in the remote district. Because now if you look at, analyze the reach of the, accessibility of the insurance by the farmers, many of these are concentrated more on the headquarters of the city, city headquarters around. So we need to definitely reach to the larger farmers, and for that, and also to, because this is still a new product for us, I think, because many of the farmers are still not convinced whether they should go for the insurance. They have not yet understood the importance of the insurance, and they're not still sure about whether after the insurance, whether they will get the claim settlement will be there, or the claim settlement will be on time. So there are a lot of other areas where we need to intervene in terms of reaching to the farmers in developing different products, because we have not very diverse products in terms of agriculture insurance. We have not very many models to discuss or to evaluate as of yet, but we know that we need to reach to the farmers so that the risk is covered by the agriculture insurance. And so for the since we are still in the infant stage, I think government has to continue for a certain time for this insurance. But how to make it sustainable is another question that you said. Definitely, because now government is providing 80% subsidy on the premium. So definitely in the long run, when the number of farmers would grow, when the portfolio would increase, then providing the same amount of premium, the subsidy on the premium might not be feasible for the government, and government have to look for the alternatives. Like we may need to review our policies on how, whether all the commodities are covered by this one, because the Ministry of Agriculture, as of now, we are covering both the agriculture, the crops and the livestock. So we may need to prioritize maybe for the commodities that are of importance from the food security perspective or from trade perspective. So there could be some of the, maybe the commodities could be prioritized, and also the premium, subsidy premium might not be even for all the farmers. So the variation in the premiums, that could be done. And also, we need to have some kind of fund, like as presented earlier, they have a CAT fund, something like that. So we may also need to have some kind of endowment fund, which is non-freezing, and then that is also kind of help sustain this the business. So those are a couple of the area that may help us to review our current mechanism, so that it will have a sustainable effect. But at the same time, because we are not using much of the technology. I was very impressed by the presentation made by our Indian colleague on how they have used the technology, to reduce to have the digital assessment of those the losses, to minimize the moral hazards. So I think we have a lot to do in that sector. We have to intervene a lot in the technology front, to have the crop estimation and to have the weather stations. We have not really sat together with I don't know if Department of Hydrology and Meteorology are invited in this forum, but I think we need to sit together with them quite often, because in the morning I was talking with the colleagues there about the agro-metro stations that is in the country. I think there are very few numbers of agro stations, and many of them were, some of them have been closed, some of them are temporarily closed. So when we are thinking about having sustainable, we need to also look into the other different models, and for that there's a lot of investment required in terms of the technology and the risk minimization at the measures. So I think if we intervene through the various approaches, then I think this will be sustainable. But definitely the subsidy alone is not the solution, I think. I'll stop here.
Thank you, ma'am. Now I goes to Mr. Varabut Chulnasin. So you are engaged in, academic institution, prestigious institute like Asian Institute of Technology. So my question is, many insurance companies, not only insurance companies, but bank, financial institution, now there is a trend, they want to implement, they want to use new technologies, They are talking about artificial intelligence, they are talking about new advanced software, they are talking about their one system, which was never heard before. So these systems also have their own cost. Eventually, insured must pay the cost in their premium. So how can, we reduce the cost of that technology, and how can we integrate this technological system to insurance system so that it could be more affordable, more feasible, more practical to all of us? Thank you.
Thank you for still giving me the opportunity to be here. Down there, I already share a lot of information and also spend time with everyone there. So still, I have an opportunity to share experience. Well, I don't know. How we are going to reduce costs of the technology. It really depends on the countries and agricultural environment conditions. I think what we have to consider is to really see where needed at the large scale level in terms of the macro environments for agriculture. Say, for example, the weather stations. And we have to consider who would provide that weather stations. And that weather stations has to be very comprehensive, and not only for precipitations, temperatures, wind, and so on and so forth, but also that mechanic also should be able to siphon data that also help to look at the risk assessment as well. So we can maybe consider, for example, in Thailand, that the comprehensive system of the macro agro environment is a job of the government at the national level, and also budget has to provide it also at the provincial or subnational level. And if we are going to look at the plots or on-farm levels, that is another system that we have to consider. And this is related to the capacity of the farmers to handle that technologies. So having said that, I think it is important to segment the recipients of the benefit based on their capacity and see what are the tech that they can use, what are the tech that they can manage, and what are the tech type that they can repair. What has been problem in Thailand is that, we impose to the mechanizations of agricultures, AI devices for agricultures, but at the end of the day, we just bombard it to the farmers, and at the end of the day, once these techs, broken, is again, nobody repair it, and nobody want to be responsible for. So having said that, we perhaps have to look at what is the small farm holder will be able to do in terms of the repairing of the machineries at the farm level, where he or she use for crop productions and land plowing and so on and so forth. We can also look at the size of the largest size of the farmers, and what is happening now, what is happening in Thailand now, it is trying to empower the local farming enterprises. And once we already empower the local farming enterprises in the farming environment, that is a better hope that we would be able to give more responsible of the farming enterprises to look after their machineries. So I think we do need to have a segmentation of that and see how we can reduce the cost and also who shoulder the cost of those technology. Another scheme is that in the supply chains that we are talking about that, and also the technology is also part of the production in the supply chains and value chains. We should not ignore the maintenance of the equipment as the supply chain, so that the ecosystem of the productions, ecosystem of the post-harvest, ecosystem of storage, ecosystem of delivering to the market can be also be economized or optimized, that the key players is responsible for. So at the end of the day, the producer will have to look at that part, but the question is, will they have enough knowledge and skill to do so? So we heard that in Japan, they are very strong, organization where they can repair these things. But I think when we are looking at the countries, and this is my last comment, is about what is the technologies that appropriate to that locality. And we have that in order to reduce cost. For example, for fruit farming, for veg farming, we use the sprinkler system, which is low cost, that we can produce in Thailand, for example. So this is maybe the mix of the considerations that we have to see how the cost can be managed for the ecosystem. Thank you.
Thank you, sir. Finally, I want to ask Mr. Malay Kumar Poddar. I want a quick answer, sir. In Nepal, there is a very big issue of subsidy, insurance company. These all things are being very big hassle nowadays. In India, as I know, less than 15% premiums should be borne by farmers in product offered by your company. So what happens if government delays the reimbursement of that premium to your company? Do you pay claim on time, or you postpone your claim, or what happened in that case? Because it is burning issue in our case. So I'm asking this question. We have very 15 minutes within. We have to finish our session. So quick answer I expect from your side, sir.
Okay, since my presentation was very long, so I'll answer this thing very quickly. First of all, this farmer share premium is collected upfront when the policy is issued, when he is enrolled by the banking organization or the common service centers, which is village e-kiosks. So when it comes to claims, insurance company in India also, the government delays in payment of subsidy because it's a huge amount. Although they made the budget provisions, but there'll be delay. The insurance company doesn't want, because suppose if the claims are within, say, I have mentioned 14% subsidy, this farmer share. So it varies from place to place, crop to crop. If it is within, say, 20%, and the claims from the prevented sowing or the mid-season calamity or localized calamity has come within that, the insurance company pays. But next batch of claims, they will not be paying. Because Insurance Act of India provides, there is a section called 64VB. Until and unless full premium is realized by the insurance company, even risk cannot commence. But for crop insurance, this dispensation has been given by the authority, means regulatory authority, insurance company pays. But this problem is there. So recently what has happened, to bring this fiscal discipline into this scheme, the government of India is saying that there has to be an escrow account. Just like we have wallet, nowadays, e-wallet. There will be an escrow account, and that escrow account, the state government will be paying subsidy, estimated subsidy, beforehand, so that this kind of delays do not happen. I think I have answered your...
Thank you, sir. Now I want to expect questions from audience. If any question you have, please.
Good afternoon. My name is Yule. I'm from OJK Indonesia. In Indonesia, we have two agriculture insurance. One is initially by government, 80% premium subsidy, and the other is index insurance initiated by insurers company. We actually held a meeting with them in April, and OJK actually had a high hope that index insurance will increase insurance inclusion. But when we asked them, how do you experience selling index insurance? And all the insurers said, we don't want to. It's a low premium, high claim, and even bigger effort because the farmer is disbelief with insurance and they have low literacy and low income. So is it possible that we can sell index insurance commercially in the next future? Because I don't think we can rely on government giving subsidy all the time. Thank you.
I think Malay sir is appropriate to answer it.
Yeah, this question is very, very valid and important too. So in index insurance, until and unless, that is the experience not only in India, I think worldwide also. So until and unless it is heavily subsidized, the farmers will not be, attracted. There has to be pooling kind of impact actually, so that farmers are pooled. In India, what is happening is that what we try to say while selling, as you said, the selling this insurance, what we say that the average premium rate is around 12%, 13%. Farmer pays only 1.5%, 2%. balance is paid by the government. So what is the big gain for the farmer if he doesn't even want to pay that this 1.5% or 2%? He keeps his crop uninsured. He loses 80% of the subsidy that comes automatically from the government. Is it a good idea for him? So that's how we try to sell, but it is difficult. As I said, the actuarial premium rate is around 12.5%, 13%. So naturally, agricultural insurance, wherever you go, whether developed countries or underdeveloped countries, if it is an all risk, it's quite costly, and it has to be heavily subsidized, and farmers has to be told when it is voluntary. Other way is to make it compulsory, which I mentioned during my presentation, is that for 35 years, India made it compulsory for the borrowing farmers who take loans, short-term loans from the bank. It was made compulsory. So that inculcated kind of insurance culture in the farming community. Okay, now if you now remove this compulsoriness, still they will come. That's what's happening in the state of Maharashtra, in Madhya Pradesh, in Andhra Pradesh, in Rajasthan. They're joining on their own. The reason is that the farmer has to pay only 20% of the cost.
Thank you, sir. I want to add on top of that, as per our experience, in Apple, sir, you want to add? Yes, please go on.
So you also wanted to understand the commercial aspect of it, whether index insurance, in terms of having products. Am I audible? Yes. Yeah. So in case of commercial use, one is that we give index insurance via some government schemes or government leads it. There are other use cases as well wherein, let's say companies like agri-input companies, they have expressed interest of taking index insurance. And I'll just give you an example of it. So a seed company, let's say, if in case they are selling seed packets, they would want to bundle insurance with it. And the insurance cover would act like a coverage against sowing failure. So if in case, let's say, in the initial 1 month from the sowing date, there is very heavy rainfall because of which seed does not germinate, then they would compensate the farmers for a cost which is equivalent to the seed packet. So in India, we have designed such products for agri-input companies, for agri processing companies as well, wherein they need to give some compensation to their seed growers if in case their produce is lost because of any reason. So that has a commercial aspect to it, that there's a requirement, not just from the farmers, but from agri-input industry as well for such products. Thank you.
Thank you. Any other question, please? Yes, please.
Yeah, thank you. Thank you to the speakers. As you mentioned, agriculture is sector that vulnerable to the risk and like natural, like pest and disease and climate change. And as you mentioned the last session that new technology, in what ways has technology improved the accuracy and efficiency of assessing agriculture risk and managing agriculture insurance claim? And how can insurers integrate new technology into their insurance products and services to better serve farmers to mitigate this agricultural risk? Thank you.
Ma'am, please.
I think if we look at the insurance, agriculture insurance in Nepal, as of yet, we have not really got into much of the technology interventions, to minimize the risk and also for the proper assessment of the loss and all that. But I think what we heard from our colleague from India is that when there is the assessment, proper assessment, the cost of operation of the insurance business is, I think, is minimized. And also the fraudulence, the moral hazard also gets reduced. So I think if these other benefits of the technology interventions, and if we go to the more accurate technology like through the weather-based, I think if the cost goes down, that will be a business case for the insurance companies also. Because here in Nepal, still the agriculture insurance, because this has been made mandatory, 5% by the government. Otherwise, I'm not sure if the other insurance company here in Nepal would still like to continue to invest in agriculture insurance. So I think if we can, through the technology support, if we can minimize the cost of operation and cost of handling, probably we can, the sector can grow one. And second is also when we talk about the technology, how we reach to the farmers, how fast they get the claim through the use of the technology. Because now many of the cases is that it takes farmers to have the claim, and there is the trust issue also. So when the proper technology measurements are there, the mechanism is there, I think the trust issue is also built on. And that also kind of helps create the demand for the insurance company also. So I think maybe through that we can intervene. But because we still have less experience on that, probably our colleagues can add more onto it.
Parabodh sir will add something on it.
Yes, I just recommend my personal recommendations. Number one, the insurance company should have a knowledge partner, the technical knowledge partner in crops or livestock. Second, the AI system or device, the technologies should make sure that there is data. And those data set also, it should be comprehensive, that the insurance companies and people in the insurance sector can make use of that data, which is possible. But because the technologist doesn't know how to programming into having that data, that is the things that we have to have interactions. Last is the insurance company should have the capacities to do the data analytics based on a specific products so that they can interpret data based on their interest for the business.
Thank you, sir. Finally, our time has been already finished. So thank you all, panelists, and thank you for the organizing team again for inviting us as a panelist and moderator. Thank you. Thank you very much.
Thank you very much to this fabulous panel as well that brought forward many interesting points on agricultural insurance, development and practices. And now to kindly present them with the token of appreciation, may I once again please invite on stage Chairman of Nepal Insurance Authority, Mr. Surya Prasad Silwal. We'd like to thank our presenter, our panelists, and our moderator for this fourth and last session, Day 2 of Asian Insurance Meet 2023, Agriculture Insurance. We'd like to thank our presenter, Mr. Poddar. Thank you very much for your insightful presentation. Ex-Chairman and Managing Director of Agriculture Insurance Company of India. We'd also like to thank our panelists, Mr. Voravat, Executive Director, Asian Institute of Technology, AIT Extension, Thailand, Ms. Neha Batra, Head, Risk and Underwriting, Weather Risk Management Services. We'd also like to thank Ms. Sabnam Shivakoti, Joint Secretary, Ministry of Agriculture and Livestock Development. We'd also like to thank Mr. Sanjeev Shrestha, International Fund for Agriculture Development. And thank you to our moderator, Mr. Sushil Dev Subedi, Director, Nepal Insurance Authority, for moderating this session and weaving together all our thoughts and opinions from our panelists and taking questions from the floor as well. We'd like to take a group photograph now. I'd also would like to request Mr. Silwal to kindly present this token of appreciation to Ms. Lamb. Thank you to all our co-organizers as well, International Association of Insurance Supervisors, Access to Insurance Initiative, and Asian Development Bank for being the co-organizers of Asian Insurance Meet 2023. Thank you very much to Mr. Silwal as well. Thank you for doing the honors. Ladies and gentlemen, we are done with day 2 of Asian Insurance Meet 2023. Like promised, the buses are all set and ready downstairs right in front of the lobby. The last bus will leave at 5:30, ladies and gentlemen. So we request you to hurry. And also an information that this transportation is so that it's convenient for our international delegates and participants to travel to our venue for gala dinner, which is Gokarna Forest Resort. Ladies and gentlemen, thank you for being a lovely audience, and see you all tomorrow, day 3. We start at 9 a.m.
श्रयाय गीतवाद्यपटवे चरिताय गायकवराय कायकाधीन विग्रहाय गङ्गाजलप्रलयवते गौरीस्तनन्धनाय गौरीहृदयनन्दनाय गौरभानुसुताय गौरीप्रणयाय गौरीप्रवणाय गौरभावाय धीमहि गोसहस्राय गोवर्धनाय गोपगोपाय धीमहि गुणातीताय गुणाधीशाय गुणप्रविष्टाय धीमहि एकदन्ताय वक्रतुण्डाय गौरीतनयाय धीमहि प्रजेशानाय भालचन्द्राय श्रीगणेशाय धीमहि एकदन्ताय वक्रतुण्डाय गौरीतनयाय धीमहि प्रजेशानाय भालचन्द्राय श्रीगणेशाय धीमहि
नत्वां श्री वज्रभाराहि मन्त्रमूर्ति जिनेश्वरी अत्यन्ता वरदाभिमा रिद्धि सिद्धि वरप्रदा एवं कारं समासीनं सहजानन्दा रूपिणी प्रज्ञा ज्ञान वरादेहाग्रे नमस्ते श्री वज्रयोगिनी नारायणता
Trinetra Yovana
Now for the next performance is the Nepalese folk dance of Mogar community, Maruni.
आकाश Thank you. Dance floor on the bottom. Moving bounds as much as you like.
उठी बैना मारे मैले पहिलो नम्बरमा